Welcome back to the
PM.
Rollup TV. What's up, Rob?
It's good to
How
see
are
you,
you, man?
man. I'm excited for this one. I think let's have some fun here today.
Yeah, I just got back from Stablecon this morning. I was in New York. Met like 3 private bank people, one in Texas, one from California, and another one. All 3 of them are launching stablecoins. One has already launched stablecoins on Ethereum. They haven't been able to get the proper regulation to actually start using it in the wild yet. The other one said that they have a way to actually go around the rule where you can't pass back stablecoins or stablecoin yield to users. I met a guy from American Express Ventures. He is looking to invest in cross-border infrastructure. There's a ton of people from Latin America and Africa, which is where the demand for stablecoins coming from. So anyway, those are the key takeaways from Stablecon. I was only there for like 3 hours. Saw a couple good talks. Fireblocks had a big presence there. Mesh Connect had a big presence there. So yeah, that was my morning.
I think I saw that. Was it MasterCard or Discover was one of the major conference sponsors of Stablecon?
Yeah, MasterCard was. And this was their first conference.
Yeah, and that is interesting because stablecoins are eating directly into credit card processing fees. And so did you get the sense that these people at MasterCard and credit card companies are taken aback at the rise of stablecoins?
Well, the thing is, the banker told me that, so he works for a private bank, and he was like, "Well, I'm here because I need to figure out what's going on, or else my business is going to be, it could get totally taken over." They do a lot of cross-border. They have a lot of foreign nationals as their clients, and he was like, "Yeah." I was like, "Well, or you could just get in front of it, and your business could grow." And he was like, "Yeah, that's what you can do."
Right.
So, yeah, I mean, that was
Innovate or die.
That was Stablecon. I am also excited about today's guests. We have Tom from Varus Capital, just recently joined, ex-Sorry analyst. I have some good questions from his experience in the Middle East. We've got David from Aria, IP RWAs. See what's going on there in the RWA landscape with regards to IP. We also have Red Guy from MegaETH. We have Flood, Hyperliquid Gigabull. Hype's down to like 33 now. See what he has to say about that. And we have Rip, the Ethereum maxi, the Ethereum believer, Rip from Rise Chain. So excited about that one as well.
It's a pretty broad swath of guests today. We have a Hyperliquid maxi, an ETH maxi, an ETH L2 representative, and an IP maxi. And we have people representing VCs.
Yeah.
So I'm curious, do you have any expectations for today? Any through lines that you think we're gonna trace through? Or generally, what's your anticipation going into today's guest?
I'm more kind of thinking about our usual Bitcoin price bet. I see BTC at 106,670. I'm feeling again pretty bullish. So I'm going to say that we go higher by the end of the show.
I think we go higher as well, but I'm curious as to why we're not reacting more positively to the tariff pause.
Yeah, I think the judge actually just turned that around. The judge gave Trump a 14-day time frame to appeal the tariff ban.
And it's more likely that tariffs will now go into effect. And so it's really business as usual when it comes to tariffs.
Yeah. Yep. All right, let's jump into the first topic, and then we'll get to the guests. We got quite a few fun things to go over. First one is classic Elon Musk and Telegram. Will Elon pay $300 million to Telegram for this Grok deal? Elon Musk created a overnight hit, the meme, denying the signing. Durov claims in principle. Not sure if this is bullish on distribution or desperate for users. So Telegram will allegedly receive, if this deal goes through, $300 million in cash and equity from XAI, plus 50% of revenue from XAI subscriptions sold via Telegram. Additionally, Telegram has made some other moves recently. They were set to raise $1.5 billion in bond to issue as soon as Wednesday. That was yesterday. Wall Street Journal reported that this was going to be included, or BlackRock was going to be included, Mubadala and Citadel. They're set to price these 5-year bonds at 9% yield. And they want to use this proceeds to buy back the remaining debt from bonds it issued in 2021, which are set to mature next March. They also previously bought back $400 million of those bonds with cash, and they're looking at over $700 million in profit on revenue of $2 billion for 2025. So, Rob, what's your take? Is this bullish for distribution for XAI and Grok from Musk's perspective, or is Musk desperate for users as OpenAI and his enemy Sam Altman and others come to the forefront here?
Look, Elon replied to the announcement of this partnership saying that no deal has been signed.
Yeah, that's the meme. No deal has been signed.
I think whether this deal goes through or not, I think there's a couple versions of the tweet that Pavel used to announce this partnership. First, he said that there was a deal in place and Grok AI was coming to Telegram. Then he edited that and said this summer, Telegram will gain access to the best AI technology on the market, meaning Grok. And then Elon still commented and said no deal has been signed. So I think, whether this deal goes through or not is still a question mark. But I do think that this is bullish for Telegram to have an integrated AI experience. I think, out of all of the options that Telegram had to integrate, they could have went and integrated Gemini or really any other model, and they chose to use one of the more open source models out there, meaning, in Grok. And so I think, there's a brand alignment here that is true to Telegram's nature. Is XAI and Grok the best model out there? I think still remains to be seen, but having an
definitely the most right-wing model, that's for sure.
Yeah, and Gork is another character there.
Dude, the trenches are so dead. Elon made Gork his profile picture, and the thing only pumped to like 80 million or something, or 60 million, I think.
Yeah. So Solana is going to have to integrate stablecoin directly into its payment rails in order to get some more product market fit. Because you're right, trenches do seem to be dead. I think ultimately this is bullish for Telegram.
I just don't think that I want AI messages. Like I don't think that I want, like, Telegram is great, not because you have this perceived privacy, but like that it's not like an Apple thing. It's not like a Google thing. It's not, right. So bringing in AI to like track your messages seems like it's kind of like the antithesis of Telegram. I'm not sure that having AI in your messages is an invasion of privacy. Like, I don't think this would ever happen on Signal per se, or at least not for a while.
Man, even Signal, struggles to keep their privacy enabled. Like, there's Pegasus that, theoretically is able to see and read all Signal messages. So I think at this point, it's essentially the case that we don't have a true private messaging service. Anything that's cloud-based and says they're encrypted is only encrypted up to a certain extent. So ultimately, should we, give Grok or any other AI model permission to utilize all of our messaging data to train its models? I think, again, we're going to have, maybe this is where verifiability comes into AI models and having some sort of data provenance. But I do think for user experience, this is bullish. This is the idea, just like Grok is integrated into Twitter, we can have a little button, we have a little command, and we can say, hey, Grok this message, and we can have a reply to it. And I think that is bullish for user experience. I think the way that it's integrated is going to improve Telegram. But again, will this leak all of our data? Is Grok going to be leveraging our messaging to improve its own model? Yeah, I'm reluctant to give up, that element of privacy.
Yeah. I mean, the cool thing about Grok is that it's trained so well on Twitter. And I remember Elon was trying to fight for some of the to have a patent on the training data of Twitter, like to have like this kind of exclusive ownership of that for the model. But we'll see how that plays out. Switching topics, FTX is going to distribute $5 billion in stablecoins or cash equivalents this week. Um, basically, they are going to start to distribute this on May 30th, tomorrow. People are saying it's very bullish. I don't know what your take is on this, how much of this liquidity goes back into the ecosystem and the psychology of trust, like after you lose so much of your capital. A lot of these repayments will be made via BitGo and Kraken. And most creditors will receive a significant portion, some up to 120% of their original claims based on the asset values. Now, I do remember this being like at the bottom when it was like BTC was like 16K. But as of January 23, there's $5 billion of assets that have been recovered. They went through the bankruptcy court, the Chapter 11, and still the total assets missing was around 8 billion. Of course, FTX had a lawsuit on November 15th, 2022, and it's forever shaped the word crypto and the perception, unfortunately, in a negative way. That being said, though, what's your take on this? Is this money going to find its way back into the market? And if so, where's it going?
This is extremely bullish.
Yeah.
Like, absolutely. I mean, take a look at the sheer volume here. 5 billion was recovered. Maybe there was an $8 billion shortfall. 3 billion of that could have been SBF's personal net worth or Alameda's, supposed holdings. There's billions of dollars being distributed in cash. These are degenerates that had holdings on centralized exchanges and felt the FOMO of the latest rally. They didn't lose money. They're, in most cases, getting back more than what they had put in cash. Yes, there was, Bitcoin that they were holding. They feel like they missed out, but in no short sight did they lose money. And so I think if we're looking at, Saylor and some of these corporate treasury strategies, Lubin's going to go and they're going to buy $425 million of ETH. Well, that's like 20% of the distributions that are happening on FTX. I think even if you get 20% of reinvestment from the cash that is being distributed by the FTX estate, it's still just as bullish as some of these corporate treasury strategies that are being deployed on Bitcoin and on ETH. And I think most likely these cash disbursements are going to be made in altcoins, Bitcoin, as well as some of these other coins down the list. Whether these go into other centralized exchanges or they get put into DeFi, I think still remains to be seen. Most of this is still going to be on centralized exchanges. Bitcoin, ETH, Ripple, Solana. These, I think, are the tokens that stand to benefit the most. And absolutely, this is a bullish signal. And one more thing here.
Did you just say Ripple?
Well, I mean, that's an example of the corporate treasury strategy, but I think Bitcoin, ETH, and Solana are examples of the coins.
Bullish on Ripple now.
Yeah, like you said, did you not send me $121 million corporate treasury strategy into Ripple? I think that is pennies on the dollar compared to these disbursements.
I honestly think less of this capital is going to go into the market than we think. Like, I think people are going to be pretty like turned off by crypto, unfortunately. But
because they had their money locked up for a while. What's the rationale?
Yeah, I mean, but I guess if they wrote it off, then it's like, it's like house money now. But, they look at where they lost it when BTC was at 15K. They look at BTC at 106. I think it's going to feel hard to get in. Maybe they buy.
That's why they go into altcoins.
Yeah, I mean, that kind of makes sense. So, I mean, look, I think either way, it's not going to be additional sell pressure. So absolutely. That's for sure.
Distributing cash. All the sell pressure already happened, right? When FTX declared bankruptcy, they had to take the customer holdings and sell those off in order to get some net asset value of the estate. Now they're distributing cash.
But I just don't think it's not going to we're going to get like a massive freaking green candle on the 30th just because FTX gave gave people some cash. So, but maybe over the next week we see some sort of positive price action from the movements of this.
I think when you look at the leveraged treasury strategies, those take time to play out. People are making the announcements now. They're going and raising money on the debt, and then they're going to take that investment and they're going to put it into the market over time. Those take time to play out. Do we know how much of the 5 to 8 billion is being distributed on the 30th versus coming out over the next week?
I'm sure it's out there. I didn't have it in my notes, but I would imagine it's not going to take very long. Like if they're announcing, I think it's starting on the 30th. So
Maybe different
yeah,
exchanges have some different unlock schedules, but I think for the most part, if you just look at the numbers here, 5 billion is more than any micro strategy investment into Bitcoin in one shot. Maybe their cumulative is 5 billion or more at this point. It probably is.
way more.
But
Yeah.
if you look at just in one shot, this
Yeah.
is orders of magnitude greater than some of the OTC deals that we see taking place on most liquid coins.
Yeah. All right. Well, let's have a good day tomorrow. We'll see how that pans out. By the way, little teaser. Next week, we're doing 3 Rollup TVs. So get ready. We're going to scale this thing up. Rob's getting after it. Guys locked in. You ready for 3 next week, Rob?
I'm excited, man. I mean, shout out to our boys at TBPN. I think they had a crypto day that, was an absolute banger. Shout out to those guys. And we're following suit in capitalizing on just the absolute opportunity here. I think ultimately you will see a 24/7 crypto native broadcast channel. That is the new CNBC, crypto native broadcast channel. Rollup TV will do it here first. Our production manager is shaking his head behind the scenes because he knows what 24/7 means, but it'll take some time to get there. I really do think that is the opportunity here.
All right, let's talk Clark AI agent. First agent to raise 60 million, or first enterprise app agent. CEO says our customers will save $5 million on average. Book a demo will save you $5 million too. We're so confident that if we can't, we'll donate 5K to a charity of your choice. Question is is this the future of work where AI agents are replacing entire internal teams? Unlike consumer coding tools like Lovable, Replit, Bolt, Clark actually builds production-ready internal enterprise apps, which is crazy. It's a multi-agent architecture emulating designer, IT admin, engineer, security, operations. Wow, this is crazy. It's already used by Instacart, Carrier, Cvent, and yeah, it's here. I mean, this is the whole there'll be a single entrepreneur with $1 billion company type of vibe, a solo company.
Yeah. So Brett is coming on the show later today. He had a great diagram and tweet that talked about the efficiency per employee in terms of how much in earnings per employee some of these companies are able to generate. And you see Hyperliquid is absolutely at the top of that list. And then you see other companies like Telegram that are, right alongside of it. And I think, you're seeing billions of dollars in revenue generated from teams that are less than 50 people, more like 30 people. But in reality, they have 10,000 AI employees, right? So I think we're going to start to measure the effectiveness of AI like manpower, similar to when, Henry Ford and we started to see the automobile start to take place. That's where they coined the term horsepower, because they had to put it in terms that people understood. You have this horse and carriage, right? Maybe there's 2 horses, right, pulling your carriage. They can go so far. This is horse and carriage has maybe 1 or 2 horsepower. We're going to deliver you 40, 50, 100, 200 horsepower. Similarly, I think we're going to see a metric here start to emerge of manpower. And I think some of these AI services are at the point where they're 10,000 in manpower. Ultimately, these are going to be sector-based businesses solutions, because last week we talked about Klarna and Microsoft. Microsoft laid off about 3% of their employee base, equated to about 6,000 employees. We saw Klarna make a similar move, but Klarna actually replaced all of their
they rehired them.
They laid off, replace them with AI, and then lost the human touch. And that was the basis for rehiring, a lot of those employees. Microsoft hasn't rehired these people yet. I do think as AI develops, we're going to start to see layoffs. Maybe it's 10 to 20% unemployment, and that has significant impacts on the economy. Ultimately, this is the golden era of entrepreneurship because of the access to employees and technology and software at our fingertips.
Yeah, well, This is kind of like what I thought we were promised with like agents, right? Like currently the LLMs are just kind of like these natural language models, but when I thought about building this company around using agents, like it's now up to the people who can use these types of tools as they're getting better to put these things together. So look, I'm excited to keep kind of like learning how to utilize these things. And I mean, maybe we ought to try this Clark AI tool and see what's up. So, on a different note, there has been a new trend on crypto Twitter that has taken over, which is the rise of Loud.io. Basically, this is taking over. The question to ask here is, uh, you know, is attention all that matters? Like, can attention seed an entire protocol? So it's kind of like this 3-3 model here between yappers, people on Twitter talking, and then also people that are kind of actually going out and participating in the protocol. If we can just scroll down on the screen a bit, you can kind of see some of the mechanics here about kind of how this works. And basically our understanding is that the initial attention offering was announced as of for, I believe it was for either tomorrow or Saturday, where you can actually, you basically need to be top 1,000 to get some sort of like special access to be able to contribute to a pre-sale. They're raising this pre-sale in 2 different categories based on your Kaido rank and based on your Loud IO leaderboard rank. Um, it's like a $150,000 market cap when it starts. And basically the idea here is like we're testing this model where if you can pay creators every week using this mechanism, then attention can sustain an economic flywheel just based off attention and no other kind of core property. So of course, this is powered by Kaido. Kaido's been crushing it. They actually just launched their NFT collection today as well. Yappy Barras. That's gotten a lot of good recognition on Twitter. If you're on Twitter, I'm sure you've seen this. We've been we'll talk to Brett about this more in depth, but Rob, maybe more broadly, what is your take on this kind of attention markets and mind share markets? You have an absolutely diehard personal brand that I know you just love contributing to, right? So please tell us about your thesis here.
My first question when I saw this was, where does the yield come from? Like, it's one thing to launch a token, you have a bunch of emissions, and then you just distribute those emissions, and you farm the airdrop. You get the airdrop, you dump it, token goes to zero. It's not worth anything.
Yeah, there's like fees. There's fees in the mechanism.
So now the idea is that you're not distributing emissions, right? You can even do this with a fixed supply because you're distributing Solana tokens as the mechanism for incentivizing attention and yapping. So that answers the question of where does the yield come from? And I think they've consolidated the user base to a certain extent where, failed airdrop campaigns in the past have been unsuccessful because they spread themselves too thin. There's something about getting $1 that you just, doesn't really work. But if you have a chance to win $10,000 and maybe you have a 0.1% chance, your expected return is still just $1, but you have the chance to make it big. And I think that's what's happening here because they've consolidated the reward pool to 25 people and they make it so that you're getting something valuable. And so you have all of these people that are competing to yap for one of the top 25 spots. They're doing this by yapping about Loud. I think you could apply this primitive to any token, really. It doesn't have to be about Loud. But in this case, you apply it to Loud. You have all of these people yapping about Loud. They're going to, incentivize participation in the network, contribute trading fees, and then redistribute those trading fees to the end user. This is essentially a value accrual mechanism for the people that are participating in the community, but it directly links the community to the product, which is the token. If you compare this to, other meme coins, like take SBX 500, right, which is, doing really, really well these days, but there is sort of this ambiguous, indirect value accrual mechanism to, hey, you expand mindshare for this thing, and you expect people to buy the token. in this case, it is a direct one-to-one correlation because people trade the token and you get the fees from people trading the token. I think this is extremely interesting. I think Loud is going to do extremely well because they're the first people to think about this. And I think we're going to see multiple other projects apply the same mechanism to their token.
Yep. I think that's a really good comparison where it's like, okay, it's not in normal communities, it's just, you're excited about it because you want to promote it, et cetera. But in this, it's like the direct correlation between the level of promotion and the the feedback that you get from the mechanism, which is just the fees or the rewards. And we'll talk to Brett about this quite a bit more. And I'm curious to see how this kind of launch goes. But we had another interesting announcement today or this past week. I think it was yesterday. We had the return of ICOs on Plasma or on Echo. So Echo launched their project called Sonar. And basically what's going on Sonar is Plasma's going to be the first ever public sale connected through Sonar, Echo's new public sale infrastructure. Basically what's happening here is Echo is this platform where you can create groups and you can then invest in early stage projects. Still kind of gated, still kind of like in the venture area. They've released this product called Sonar, which has much more flexibility, and Plasma is going to be the first company launching on it. They're going to have 10% of their token supply sold at $500 million valuation, which is their same valuation as the last equity round. Disclosure, Robbie and I invested through our fund at an earlier round for Plasma. So as we talk about it, the Kobe's ICO platform is kind of bullish, kind of bearish. I'm not sure, Rob. Curious your take. Basically, anybody can participate. U.S. people get cucked again with a 12-month vest or 12-month cliff because of the rules and KYC. But yeah, that's the platform in a nutshell. Sonar is basically bringing out this way to facilitate better token sales. So I think this is in the right direction, and I think it's something to be excited about. I think people may think that Plasma's valuation is a bit high on this round, but what they don't understand for this specifically is you're actually just depositing stable coins and then kind of like pre-farming it almost, rather than like doing a venture bet. So that's the Plasma situation, but I think what's more pressing is the conversation around Echo's new platform.
Before I tell you my take on ICOs and Echo and Sonar, maybe you could tell people what Plasma is. Maybe they're interested in this round and participating in the ICO. Maybe tell people what Plasma is, and then we'll get into the ICO business.
Yeah, I mean, Plasma is a purpose-built chain for Tether, effectively, for stablecoins. So I met with their team in New York City the last couple of days. They're working on a lot of cross-border payment infrastructure for a lot of global companies where Tether is very active already. So they do a lot of kind of last mile work in terms of settlement, liquidity, on and off ramp, and getting USDT into people's hands globally. The chain isn't launched yet. The token's not launched yet. It's going to all kind of come together on mainnet. But effectively, it's a payments-focused chain that is meant for what I would say a lot of the world who doesn't have access to the US dollar today. And why do they need a chain? Tether is mostly on Ethereum and Tron right now. Those chains are both not exactly purpose-built, technically speaking, for stablecoins and payments. So that's kind of where Plasma is trying to fit in.
Yeah, and one more note here technically is that Plasma has USDT as the gas token. So you essentially have gas abstraction. It's really a payment processing chain for Tether, and gas fees are taken right out of the executing balance. So I think this is something that is going to continue to be important for stablecoin infrastructure. It's no surprise that Tether is building out their own chain. You also see RWA platforms building out their own chain, like Converge from Athena and Securitize. Fractal is building out their own chain, and they're doing so to support some of the big bank infrastructure for deploying their own stablecoins. You mentioned stablecoin was this morning. A lot of these banks and local issuers are looking at launching their own stablecoins. They're going to be looking for infrastructure to process a lot of these stablecoin transactions. And I think they're going to look at existing infrastructure, and they're really not going to build it out themselves. Even the big banks, JP Morgan and Citi, I think are looking at someone like a Frax to help with their infrastructure. So really no surprise that Tether is going into the chain world. I think ICOs are especially interesting because they're democratizing investing. I think, for too long, we've had accredited investor rules, and the SEC has been out to try to protect us from our own investment principles and beliefs. And I think this has been a long-standing philosophy in terms of my libertarianism, is why is the government responsible for protecting us when, a simple internet search is reasonable for us to become well apprised of the information here and make our own educated decisions. So I'm really excited about the continued financialization of things around us and the lower barrier of entry here to democratize investing. I think ultimately the old adage is right. You can buy lottery tickets, you can go to casino, and you can blow all the money in your pocket. Why is venture investing any more risky such that the SEC needs to protect us from it?
I think it's just more about like accreditation as far as getting basically scammed by people that don't have good intentions. It is the reasoning. So
I mean, maybe there is some sort of accreditation that should take place on the project's side, right? But on the investment side, as long as there's a project that passes some reputational test, then shouldn't it be open to everyone? And maybe we need a regulatory body to pass that, from the business side of things. But I just stand by the idea that, look, if there's a house edge and I'm 48% likely, to win versus 52% likely to lose all my money, sports gambling, at least this is something where I can do my own research and it's more of a skill game. It's not pure gambling. I can control my destiny to a certain extent, and I have a better chance at capitalizing on some edge where I find an opportunity more so than going to a casino or lottery tickets or sports gambling.
Yeah. No, I definitely hear you on that. All right, I think we have some pretty good guests coming up. Maybe have time for one more topic on the macro side. Take here is on Trump kind of rolling the tariffs and trying to do a tariff ban. The Congress trying to do a tariff ban and Trump being like, no. So positive side, we have the U.S. consumer confidence rose to 98, exceeding expectations, best number since February. U.S. and Europe is trying to reach a deal. There's quite a lot of negatives, though. The median age of home buyers is way up, 56, up from 31 in 1981. And overall, there's just like a weak consumer perceptions. So, yeah, Rob, I mean, I would like to get your take on the tariff kind of cancelization and what your thoughts there are. Kind of like this back and forth.
Yeah, I think ultimately this is going to come down to what happens in the midterms, because for the tariff plan to work, it has to extend at least until the midterms. For it to really take effect, it ought to take place for multiple administrations. And I can sort of lay out my understanding of what the tariff plan is. And it's effectively to eliminate the income tax for people that are making less than $150,000 a year, and instead to finance the government using tariffs rather than income taxes. I didn't know this, but I heard about it on an All In podcast with Howard Lutnick, that this was originally the way the US government was financed from, I believe it was like the 1880s to the 1930s. And then we started to implement an income tax once we needed to add some extra financing for the government to finance the World War, or the multiple world wars. And so I think, that is sort of the period in which we're trying to like make America great again, is by returning to that period. One way that we do that is by financing the government with tariffs. And again, we have to have this playbook play out for multiple administrations in order for it to work. And that's going to take, some incremental progress that we can show the voting population, like, look, this is working. Continue to vote for these people that are expanding these policies, and let us play this roadmap out. I think ultimately, we're not seeing inflation rise with the bond market the way it is. This is going to add some shaky foundation to the administrative policies that we're seeing. And so I think the one criteria that we're going to have to really take into account is the bond market. And it may even mean that Powell raises rates to try to stagnate inflation and bring the bonds back under control. If we can do that, there might be some economic pressures at play. But I ultimately do think that if we can withstand this now and push some economic progress going into the midterms and then going into the next election, this is what's going to be necessary to play out this tariff playbook. And look, this is our one shot to basically play out this experiment. If it doesn't work now, I don't see the US voting population voting for measures of austerity or tariffs anytime in the near future.
Yeah, I also think it's kind of funny that we had this entire Doge push in the beginning of this presidency.
Yeah. And look, now Elon's time is coming to an end. I think, we're seeing this austerity measure sort of fizzle out relatively quickly, which is unfortunate because we didn't see a significant impact in the national debt. We really didn't see a significant drawdown in the amount of interest that we're paying on the national debt. These are really the things that Doge was meant to curb. There was waste, fraud, and abuse that I think, we did take out of the system a little bit, but this was really just scratching the surface.
Okay, so
in order for this to work in the long term, I think this needs to be pronounced measure of austerity. And there's ways in which I think we can do that without putting the pain on the broad US population.
I think that there's no way we're going to have rates be raised.
That's all I'm doing.
And that Trump is actually going to had a conversation today with he had a conversation today with Powell in the White House.
Yeah.
And in that conversation, he definitely is pushing Powell to cut rates because the next Fed meeting is in June, I believe. And they have a chance to cut sometime in June or July. But I think, again, if it's a 25 bips cut, then doesn't really matter. So
I think the issue here is that, they're going to try to get the bond market out, back under control by doing some treasury buybacks. And I think that is somewhat inflationary. And if we do see that level of quantitative easing, they sort of call it, not quantitative easing, but if that does make its way into the markets, we're going to see inflation creep up, and Powell's going to try to combat that.
Alrighty, up next, we've got Tom Dunleavy, head of venture at Varus Capital. We got some fun questions about, actually watched one of his recent podcasts on Unchained, talking about REV. It's a pretty good pod. I kind of feel in the same way that he does about it. He has some interesting thoughts about the Middle East, his VC fund, stuff like that. So excited to chat to Tom. Let's get him up here when we're ready. And yeah, Rob, I mean, we're going to get a little bit of insight here from the VC landscape from Varus. Tom, what's up, man? How are you?
How's it going, guys? Thanks for having me. Congrats on the new show. Seems like it's going fantastic so far.
Yeah, man. Where are you calling in from?
I'm in the Boston area, so East Coast time, which makes dealing with all our friends in the Middle East and Asia always very fun. But yeah, calling in from the East Coast.
I'm sorry about your loss, man. I'm a big fan of the Celtics, but I'm sorry about your loss.
Dude, it's funny. I'm from New York, so I've lived down the block from Fenway, and now all the stadiums around here, and it's I'm a New York fan, so I'm kind of in hiding here. So I'm happy the Knicks are kind of doing well. They're about to get bounced, but yeah,
they're definitely about to get bounced. Oh, good, man. Well, thanks for joining us, man. We got a bunch of questions for you, kind of a variety of topics. We'll just kick them off, kind of go rapid fire style. Happy to kind of dive deep into any single one. One of your recent tweets that I'm particularly interested in was around valuation frameworks for crypto. And I think the tweet read, kind of crazy that we're totally cool with creating a new asset class, but a new valuation framework for said asset class is too nuts for us. I don't know if this ties into the REV conversation or kind of what you were thinking there, but maybe you can just give us your mental model for valuing crypto assets, whether they're L1s, L2s, or different types of crypto assets, and just kind of like what this new valuation framework is in your perspective.
Yeah, so I think we have to think of these things in terms of crypto assets in different buckets. You have Bitcoin, which very similar to store of gold, like flow type models, not stock to flow specifically, but flow type models kind of make sense in terms of supply and demand there, because the use case is hold, accumulate, store more Bitcoin, store value, like sort of separate. Then you have L1s, which, the token valuations are very much tied to the underlying security that these assets hold and that is built on top of them. So to me, that is immensely important. Then you have sort of application layer stuff, which, I think very much justifiably can be tied to revenue. These are like little businesses built on these broader L1s, which are like, nation states or countries or, real base layers that facilitate the economic activity that these companies at the consumer layer are building on. So I think the pain point that most people have is taking what should be a business at the consumer layer and trying to value the L1 the same way they would value those businesses, because L1s are fundamentally different. And L1 is trying to foster network effects, which means growing users, growing transactions, and growing community. And just like we saw in 2021, what's the exact antithesis of growing those networks? It would be charging high fees, right? Because then that immediately destroys network effects and folks just go elsewhere. Block space, while it's important that it's secure and takes a while to build those network effects, is effectively free, right? We've seen how quickly you're able to spin up an L1. So the rationale for not valuing an L1 on fees is because it's detrimental to those network effects. And we've seen the history of this in crypto to date. Everything the roadmaps of all these major L1s are doing are to increase scale and lower fees. And you've seen this across the board. So my extension of that is that fees on these L1s are effectively going to be going to zero. Solana has said this, and it's always said this in a number of cases, right? We're going to go to I think it's 1/100th of a penny or 1,000th of a penny, something like that. Like that's where we want to go. So if that's where we want to go, and that is a big part of the thesis of a lot of people who try to value L1s on traditional models like DCFs and things like that, how do we get to some valuation framework for these assets? And does that mean they're not valuable at all? And I think that's not the case. I think they are very valuable. But how do we think about new frameworks and how and why they are valuable?
Yeah, absolutely. And just to take that to, the next step here, as you're thinking about why these things are valuable, obviously they are because they house the infrastructure for so much economic activity. What do you think is a better barometer for the valuation there, the economic activity that does take place on chain?
So this is where the tweet comes in. I don't think there's any. Folks try to take the easy way out now and say, hey, we could do this thing. We could do it on DCF. And it's like, well, okay, fees are going to zero. And these things aren't really, even if you try to do a DCF, you have to do it in like the native currency, which is sort of like weird recursive, like language, any sense. Then you have to start drawing analogs to corporations, which like don't make sense because they're not the same thing. What do you start valuing these things on? And then this is where we have to come up with new frameworks. And I don't have a perfect framework for it, but the framework that in my mind makes a lot of sense is on some portion of the economic activity that is generated on the network, because the network itself is an attack vector. If I could take 1/3 of supply of Ethereum or Solana, which would be very hard to do, I can disrupt finality. I can disrupt the underlying settlement of enormous amounts of transaction volume for a number of businesses that are built on Ethereum and or Solana. If I got 51%, I could actually fork the chain and then really disrupt economic activity. So it has to be some portion of the underlying economic activity. Now, I don't think tying it directly to TVL makes sense. Probably not directly to stablecoins. Probably not to total economic activity, but some blend of those metrics is what we have to get to. Because if we just take that to the logical extreme, if there's $1 trillion of assets, say on Solana, Solana itself cannot be worth $1 billion, because then I would just find a way to purchase $1 billion or $500 million of Solana and attack that $1 trillion. So what that ratio is, we're going to sort of figure it out, right? And I don't think it's going to be perfect. It might be Solana 1, other assets 100, whatever it is, or maybe it's 1 to 10, maybe it's 1 to 5, I don't know. But that's like the sort of mental thinking that I think we're going to have to grapple with as an industry, because just unpacking why transaction fees are going to zero. If you were to take the entire world's volume of credit card transaction volume today, which is about 200 million transactions a day, charge a penny, that's 20 million a day. In terms of annual revenue, that only gets you $7 billion. Now, Solana itself today is worth 90, 100 billion, whatever it is at the moment. So you're already at a crazy revenue multiple. So folks start throwing in MEV. And it's like, okay, well, we can add an MEV to that revenue calculation. If you look at MEV, there was a study by Chicago Booth, what MEV in terms of high frequency trading, which is MEV in traditional markets, is valued at only $7 billion. So we add those two numbers together of all these volumes. If we do every transaction volume for every credit card in the world, if we add in all the MEV that TradFi was getting today, we get to something like $14-15 billion for all L1 volumes. If we hyper take over everything. So if you look at that number and you say how can we justify the $90 billion that Solana's worth today, or $700 billion, the aggregate L1 complex?
Yeah.
It just doesn't make any sense. So, and then you say, okay, are these things even valuable? It's like, well, no, of course they're valuable. So how do we value them? And it's on the underlying assets that they're generating economic activity on.
I think this is particularly important for the institutional landscape, right? Because obviously your background, you're looking at things from the venture side, looking for ways to value new types of essentially mechanisms on chain, different types of L1s, chains, apps, etc. And I was speaking to a investor from Franklin Templeton at, I think it was in Denver or at a conference here in the city, and what he told me was he doesn't necessarily like the DCF or the revenue. There's always different things. What he's looking for is a way to actually measure some sort of adoption over time, and then forecast that adoption through the core idea or primitive of that product, and be able to then make some sort of financial model based on the adoption of that technology, right? Like he's not exactly thinking about DCFs or revenue multiples. It's just at the very bare bones level, we need to be able to model at least certain aspects of these things out in time. So, look, zooming out from the valuation frameworks and kind of diving into some of the stuff that you're doing out in the Middle East, just curious how you got yourself initially established out in the Middle East, what that looked like from a practical perspective. Obviously, you're in the States now. How'd you get involved out there?
Yeah, so our fund is based in Dubai. Our main backer is the royal family of Qatar through their family office, which is also based in Dubai. A lot of deep connections in the region. Our managing partner, our other team members are out there. I'm sitting in the US, as I noted earlier, and the exciting part for that base of capital is they're really trying to get their arms around crypto. They're excited about it. They have a lot of money. And as you've seen from all these initiatives from Saudi, from Qatar, from Dubai, et cetera, they're looking for ways to diversify from oil and a lot of the legacy businesses they're in. And the forefront of that diversification is crypto and AI. So they're looking for really smart ways to get into it. And the cool part for startups and folks listening is that all of the interesting startups, or not all of them, a lot of the interesting startups are here in the US. So they want to get access to us. They want to find smart people and smart companies. So I was lucky enough that they were looking for someone in the U.S. who kind of fit the bill and is able to give them some access to those avenues. But folks in the Middle East have a lot of money. They're very curious, and it's on us to get the education and get them interesting things, as you talked about, that are accelerating in the crypto space.
So what is it like then working with the royal family, outside of the time zones?
Do you ever bring them to Fenway and, what do they think about an American hot dog at a baseball stadium?
Yeah, it's funny. So I just joined Varies, very short time ago. So I haven't had the privilege of meeting any of those folks yet. But, from what I understand and our partners who are much more active directly working with them in the region, there a lot of those people, a lot of the folks in the region are all Western educated. A lot of them have studied over here in Boston or New York or wherever, and this really is this new generation of royals throughout the entire region. Is that very smart people who are educated abroad are now bringing a lot of those sort of thoughts, values, and investment approach home with them, and they're investing across the board as such. So I think it's a really exciting time. I mean, you've seen the U.S. government get involved in this stuff now, and recognize that this is going to be, and this is a different Middle East than it was 50 years ago. It's a new forward-thinking Middle East, and they have a lot of money, have a lot of capital, and they want to progress the region forward in different ways. So I think it's really exciting that our industry is able to help facilitate a part of that.
Tom, if you were to grade Trump's recent visit to the Middle East, A, B, C, and maybe give him some, grading tips and terms on how it went, what grade would you give him? And anything to improve, or generally some things to call out?
Man, I'm not gonna put on my political science hat too much, but I would say it's the exciting thing is that we're opening up doors to the region when, from what I understand, the Biden administration effectively shut down everything in the region, wouldn't give access to chips, wouldn't give access to any investment vehicles, wouldn't allow, companies in terms of direct investment, between the US and anyone in the region. So just opening that door is immensely important, because we need strong capital partners. We need forward-thinking, folks in the region, particularly those who are strategically oriented and have a lot of oil and other things that we're going to be needing. I think developing those relationships is smart. So in terms of that, I don't really know the nuances in terms of the other things that are in interplay, though.
Yeah. So you mentioned a lot of the capital is going to be flowing outside of these older, more prominent kind of physical industries like oil, real estate, et cetera, into crypto and AI in particular. And with there being that very large wealth fund from Qatar looking to invest $500 billion into the US, what's your kind of thoughts on how much of that is going to come into crypto and in what forms, right? Are they going to be doing some of these strategy vehicles? Is it mostly on the venture side, liquid side? What are you seeing as far as the demand for how they want to actually allocate that capital and kind of how much of that into crypto?
Yeah, so I think the scale of the capital would actually shock people if they looked into it. So that is just one individual entity. If you look at each individual royal in each one of these nations, each individual city in each one of these nations, they have their own wealth funds. They have their own private assets. And in aggregate, it is a staggering amount of capital. So that is just a very, very small sliver. That portion, I think, is directly related to AI, chips, and things like that. But more broadly, the region is deeply integrated into looking at crypto. And you can just look at these cities they're building. So I think it's Radia in Saudi Arabia. There's a Vision 2030 plan from a number of these nations. And in the forefront of that is ways to get integrated into crypto through, a lot of things like DePIN, through smart cities and things like that. So I would say they're just, and looking through avenues like tokenization, and I would say they're open to for all of these things. We just need smart people in the room to convince them why they make sense. But they're already saying, hey, we're excited about this, and what percentage they actually allocate to it. It's really up to us to convince them of what percentage. I would say very interested already. And we just got to make that sell to them.
I think we saw something, Rob, about XRP, right? There was a Saudi prince or something that was trying to do a XRP strategy.
A corporate treasury strategy into XRP. Yeah, we have funny opinions about XRP over here. But yeah, I think...
I got a... Sorry to interrupt. I got a call. We were on an investor call today, and a bunch of investors in the region more broadly were just trying to get up to speed on crypto, and there was a question directly about, hey, what do you guys think of XRP, and would you invest in it?
It's always the question, man. It never stops, bro. I was like, is this guy tired? Yeah. Or is he just tired of hearing about XRP as well?
Yeah, well, I literally went like this for like 5 seconds. They're like, "Do you need me to repeat the question?" And I was like, "No, no, I'm just trying to say this in like the most diplomatic way possible." I think I called it a banking meme coin. Was where I ended up, but yeah.
Nice.
I like that framing of it. Yeah. Tom, I'm curious, as we're kind of rounding out, these capital flows from the Middle East into the US and into these crypto and AI founders, what is the pipeline there for a crypto AI founder, maybe in the West, to ultimately access capital? And what is the pipeline for their idea to ultimately land and resonate with these capital allocators? Is it reach out to you, a VC that has the connections? Do they go directly to the source? What advice do you have for founders that are looking for a more global reach?
Yeah, it's one of the things that really attracted me about joining Various is that developing relationships in the region is it takes a very long time. So our team's been there for almost a decade now, just working with individual governments, individuals, and in these corporations and sovereign wealth funds, and it's a very much relationship based business. So I would say whether it's us or others, find a good partner that can meet you or introduce you to the right people and kind of hold your hand along this process, because it's a very different way of doing business than America. It's not just directly jump in and let's figure out how much money we can both make together. It's more of a family approach, right? Like, I know you, I trust you. Let's do business together. It's going to be doing business for a long time. So that would be my recommendation: is find some trusted partners in the region and get access that way.
Yeah.
Awesome.
Or move out there, right? Or move out there and do it yourself, right? That's what a lot of people are doing. A lot of people are moving to Dubai.
It really seems like a long-term approach where, we sometimes see these staggering numbers and we think, oh, this is a cash grab to try to capitalize on some short-term opportunity. But really digging into it, these guys are planting seeds for the long haul.
Exactly. It's a very long-term game, and I think it's different than the crypto messaging because we're not used to long-term games, and it's very different than like the American Western way of doing business, which is quick, instant gratification. These are big capital flows and very long-term games.
Tom, last one for you before we let you go. There's $7 trillion of capital in money market funds as of yesterday. A lot of people are sidelined in the broader macro markets. We've had quite the rebound in crypto and in the macro. Put you on the spot a bit. Is the summer going to be a slow one? What's your expectations for kind of Q3, end of Q2 into Q3 for macro wise and crypto? And why do you feel this way?
Yeah, I mean, my position when these tariffs were announced and when they we had the market downturn is they were going to be a lot of bluster, fairly short-lived, and we're going to settle at some higher level, and the markets are mostly not going to care. So far, that's proven to be true. I think that will continue to be true as these deals sort of just kind of proliferate through, and the market cares a lot less about them. What I do think will be really interesting is a lot of the crypto legislation and executive orders that come in the summer. So I was lucky enough to be in DC meeting with the Trump administration about a month ago. And this was before the stablecoin bill, but that seemed like it was a done deal, which is almost all the way to the finish line. The market structure bill seems like a huge priority after that, which hopefully should be done sometime in the summer, which seemed a little ambitious for me, but the folks in DC seem to think they can get it done. And then we have a lot of the findings from, remember the Crypto Council and David Sachs and all that. They had 180 days to give recommendations to the president, which will then be signed off by him and then given out to each individual administration, the SEC, CFTC, whatever, all those others who actually do a lot of the work in terms of here's what I want in terms of my priorities based on the findings of our council. And I think that comes in July. So we're going to have a lot of very positive regulatory news coming out on the back of a lot of already positive momentum in the government. So I think it could be a sleepy summer in terms of macro as these tariff like bluster kind of winds down. But in terms of crypto, I think the momentum is going to stay.
Already appreciate that explanation. I had a contrary take from Jordy Alexander of Selene. Kind of talked about how the Fed's not going to be able to really, give us the juice on the liquidity side until we kind of get some, just a bit more pain perhaps. So we'll
Yeah, I
see.
mean, but we have, as we noted, we have what is it, 7 trillion in money markets right now. Like
Yeah.
any movement in rates down, any sort of easing those are massive capital flows that potentially could be coming. And remember, it's not just a U.S. story anymore. This is about China, and this is about the rest of the world too, that drive a lot of those liquidity flows, and they are going to need to stimulate, especially if the U.S. keeps its foot on the pedal with these tariffs.
All right, Tom. Thank you for your time, man.
Thanks,
it's been
Tom.
a pleasure.
Thanks, guys.
Catch you next time. Peace, buddy. That guy's fucking smart. Excuse my language.
Yeah, I think so. I mean, look, anyone who's been able to tap into the networks that exist in the East, I think are extremely important. What I'm curious about is, how crypto is going to break out of this echo chamber that's been caused by macro. We have, these liquidity conditions that seem so overarching, and we look at things like the $500 billion sovereign wealth fund.
Yeah,
Tom's coming on saying that's just a sliver of the macro environment.
No, and I think he's totally right. I think it is just a tiny
Absolutely.
amount, which is crazy.
Right. And so we already see kind of this envelope around the crypto environment by the U.S. macro conditions. And when you think about the scale here, there's two things that come to mind. One is that we're still early when it comes to the sheer size of the capital base that exists around the world. And the second is that, look, these can have quite a weight on the crypto market, right?
Yeah.
As the crypto market grows, it's still so small, right? And it becomes integrated into the existing capital markets. I think this is going to become increasingly so that, we're going to have to play nice, figure out what's going on in the macro environment in order to capitalize on that in the crypto environment.
Man, I mean, what he said about the capital wanting to specifically move into crypto and AI, I think is particularly pressing as well. Right? Because I mean, these are like, this is kind of where the puck's going. And so the Middle East kind of playing a game of catch up per se, where they're trying to get ahead in this space as they were kind of in the oil space and others. Up next, we've got David Costner, Chief IP Officer at Aria. Again, I was at StableCon this past morning. Tons of RWA activity there. Lots happening. So excited to talk to David about what they're building at Aria, his take on IP and RWAs. We'll get him up here and let's go.
Good to see you, David.
David, good to see you, man.
Hey, everyone.
What's up? How are you?
Guys? How are you doing?
We'll get you unmuted here in Google Meet so we can hear you.
Where are you calling in from, David?
Sorry about that. Yeah, good to meet you guys. Calling from San Francisco.
Okay. Good morning. Yeah. Good late morning to you.
Yep. All right. So let's talk real world assets.
Yeah, man. Let's talk IP RWAs. I think that's a mouthful for a lot of people because IP is an RWA, but the term RWAs makes crypto feel like it's not a real world asset.
Right. So we're trying to just make Mirage. No, it's an acronym. It's pretty much that IPRWA. The idea that we're tokenizing IP streams, right? Intellectual property, which you probably know, and that consists of largely income rights, sometimes copyrights, which are tied to income rights. We also have a program where derivative rights are able to be, licensed, and derivative works and tokens created and airdropped to parents. So the idea just in general is creating value out of IP that not only pays yield, but also provides rights to anything created from the IP, which we think is really the killer app, especially in story and just with the incredible creativity and financialization of Web3 and people in general.
That really seems like the breakthrough here is putting traditional assets on chain and turning them into productive assets. Once you can turn something like IP programmable, you can unlock a lot of the latent capital that, maybe by supplying it or borrowing against it and financializing it, you turn it into a productive asset.
That, and you get to not only a productive asset, but you're able to create lots more productive assets from it. And that's, I think, where the blockchain's amazing, where in the real world, sure, you make remixes, you can make derivative works, you can make a cover, but most of the time, compulsory licenses aside, you have to go directly to the rights holder. You do a few of them, you post it online. It's a laborious process, and then getting paid requires, accounting, lawyers, accountants, that kind of thing. And what's great about the blockchain just in general is there's automatic attribution. The provenance, as it were, is directly auditable and trackable. And so you can make derivative works based on a tokenized work. And what we do is we drop 50% of the currency for the new derivative token to all of the holders of the parent token, which gives the holders of the parent token obviously a huge useful benefit, like we're going to get more stuff. And it compels them not to sell, right? Because we want them to enjoy the yield and the future benefit of their token, of the rights that they purchased. But we also want them to hold those rights because they're getting continued new rights or new airdrops of new tokens all the time, right? It could be years later, like, oh man, a new cover or a new remix or a new album design or t-shirt or whatever just came out and it's making a ton of money. I'm glad I kept this thing,
Yeah. And that incentivizes people not to sell. Could you explain here the flow, right? I think it's intuitive. You tokenize this form of IP, some property rights. Where does the yield come from?
Right. Yeah. So in general, and Aria has a couple different products. One of them is really more based on programmable rights, but one of them is more of an institutional income fund sort of vehicle. Both of them, though, include income, right? And to your point, they come from generally, streaming, of the DSPs, synchronizations. When you put a music to movie or TV or whatever, you synchronize it in, and that pays a fair amount of money. From what's called public performances, which happen anytime a song is broadcast or streamed digitally or through the airwaves. A public performance royalty is paid, and so that's on the publishing side. And the master, which is a similar copyright, that is also paid, right, in slightly different ways. So anytime you hear music, used in Web 2 or Web 3 or anywhere, basically, there's some sort of royalty being paid, and we're capturing that. Now, the royalties vary per asset, and obviously that's disclosed per product, but that's the universe of income that we're talking about.
Yeah. So when people are looking at this landscape, right? Because I think when people look at crypto, they see, blockchain, they see speculation, they see different types of crypto assets.
Yeah.
L1s, L2s, meme coins, DeFi tokens, etc. What is it? How should people think about IP on chain as a different asset class compared to the traditional kind of crypto landscape?
Yeah.
I guess what do people find most attractive compared to traditional crypto assets?
Yeah, no, it's a great question, and I'm actually not a crypto native guy. I'm a music guy, and I came from the music. I'm obviously familiar with crypto and financialization in general. But what excites me about this was how it really applies to the real world. It's not a crypto or a sole crypto centric play. The Spark program, like we're talking about, that's an equity like program where you're getting an income stream, but you're also getting drops of new works, and it really could go to the moon because you never know. And we're working with iconic works to start with, and then we're commissioning third parties to come in and make like top remixers to make remixes that everyone's going to get drops of. So the long and the short of it is income is actually a very, very stable asset class. Music income, right? It's recession proof. In fact, people tend to listen to more music when they're sitting at home. During the pandemic, streaming went up, that kind of thing. It's very predictable. The decay, most of the works that we're purchasing have years of history, so we can see where that's going and we can model that out. And you're not tariffed on music income yet, but I don't think we will. And so it's really it's a very, very stable asset class. It tends to pay like between 5 and 9%, which it's not as stable as a government. But if you think about it, like what would have to happen for everyone to stop listening to Spotify and Apple Music and syncing and the radio and we're talking about dozens of copyrights, sometimes hundreds when we're talking about bigger funds that we monetize. So it's a fairly stable asset class, especially from notable artists. And then you add and so that's more like a bond, but it's a bond that is tokenized and is accessible for everyone. You don't need to be tied in with, you don't need to be, have 5 million under AUM or anything to get in with a private equity company or something. And then separately, there is that sort of scalable, a little bit more crypto native. Hey, we don't know where this could go. There's only X number of tokens and this person's a star and you get income. There's all sorts of derivative work. So there is sort of a gambling, not gambling, but a shoot the moon kind of element to it. I will say that I'm attracted to stability. We don't, the people in the real world read crypto headlines and get frightened. And that's not going to help us grow. And I don't think it helps Web3 grow. And I think the RWAs really provide the chain to be highlighted for what it is. It's a really hyper efficient way of financializing, but also sharing and attributing and attributing, right? And registering, right? That's not really how meme coins work or how NFTs work. They're just something. And to me, they're air. We're not selling air. We're selling real stuff. And there's a real baseline value to it.
It is the right way to think about ARIA and this sector as stocks that pay a dividend, right? So for instance, this stock could go up or down in value based on the performance of this artist and their intellectual property. And then they also pay a dividend in the licensing income that takes place. If so, maybe you could comment on that. And then also tell us, what are some of the IP that you have on the platform now? And what is the yield that some of these artists are paying on their IP RWA?
Right. So, I'm an intellectual property attorney, but I'm not a securities attorney. And, the word stocks scares me. But yeah, the idea is you're participating generally as a copyright holder or income right holder in the outcome of the work in which you are participating, right? And so if it does well, and frankly, we assume that, or we predict that the attention to these songs will make them create more money in Web 2 that's going to flow back on chain. But also as we commission and the public makes remixes and derivative works and whatnot, which derivative works may be released in the real world by the label who owns the parent asset, right? Because they will have rights and they will make money from this. That will dramatically increase the amount of money coming on chain to the parent work, but also to each of the derivative works. We're going to have competitions, we're going to have releases, there's monetization online. There's a lot of cool things that can happen that have never happened before. And it is Web3 that allows this to happen. And it's fantastic. And it doesn't corrupt Web2 in any way because that money's still happening. And to your point, it still comes online. So it's a real, you're not just saying, hey, I've got a coin from so-and-so. You're like, you're in the band, basically. It's just, you don't have to wake up as early, don't have to stay up as late. And if you're the drummer, you're not going to explode.
And David, do you have some interesting, iconic IP on ARIA now, or anything that you're cooking for us that we get excited about?
Yeah, no, we actually just we're closing what we call this. We did a Stakestone vault where we included these are partial copyrights and they're not programmable, so it's just passive like a fund. But music from Blackpink, from BTS, from Miley Cyrus, from Dua Lipa, from the list goes on and on, John Legend. And so that pays a yield, I believe. And we're not done. We're actually adding more to it. And we delayed the final launch of the token because we're adding some programmable works to it, which are super exciting. They're not closed yet, but I think people will be really psyched because like, oh, wow, I'm getting this. And then all these other things can drop. It's going to be cool. It's definitely names that you're like, oh yeah, I know that. My kids know that. My parents know that. Whatever. Everybody knows this, And so it's just the beginning. We're in talks with all the major labels, all the major publishers. Everybody's like, dude, this is great, And the question is, what are you doing differently than others haven't, or than what others did in the past? And we're really working it from the rights holder perspective, but we're really working hard to be like, hey, what's going to make an investor or a fan or whatever not sell this token. It's not a rug pull. It's not a pump and dump. It's like, hey, I want you to hold this in 5-6 years because you keep getting drops of new stuff, which obviously supports the price, and everything else.
And what do you have a gauge on how much income you could be paying on some of these assets? Like how much, in drops do you expect, or yield do you expect, like a Miley Cyrus or a John Legend token to generate?
Yeah, I mean, so those tokens are actually all wrapped up in one sort of fund token we call APL, the Aria Premier Launch, right? But it will pay, between 5 to 8% as a baseline. You know what I mean? And then, we don't know, right? Because we're going to include programmable assets there. Each one of those can be then tokenized, each one of those tokens, and they will be separate tokens. They'll just be dropped to the APL token holders, right? As we discussed, that share. And so those may have a life of their own that may dwarf the income stream of John Legend, right? Or Miley Cyrus, because those are older songs. They've already had to decay. It's, the nature of IP is, again, with predictability comes eventually decay with bumps of activity. And then actually it starts to go up, because the music business has traditionally over the last 100 whatever years gone up, right? Except for a little blip during the Napster eras, So it's to the holders of the APL, my suggestion is don't sell, right? Because you're going to get the income stream, but you just don't know what's coming next. And obviously, you sell sometime, but like, it's not meant to be like, okay, great, I'm out. It's meant to be like, okay, what's coming next? And, we also have plans to drop, like for future drops, to give everyone, like everybody in our token ecosystem, a small piece of every new token that comes out, because you can do that on the blockchain. It's so amazing, and that's what's great. That's what you don't see with meme coins or NFTs or whatever. It's like, no, this is something that means something. There's real utility to it. So don't just sell it,
David, I appreciate you joining us. Just one last question. If you were to have any IP on Aria today, this week, what would be your dream IP on Aria?
My dream IP on Aria. Warner Music, are you listening? No, I'm just kidding. There's a lot of cool shit out there. There really is. Like we're flirting with a lot of. I don't want to say it because I don't want to tweak anybody out, and we're in negotiations. But there's a lot of. I'll tell you this: EDM tends to be more akin to, or more applicable to remixing, right? Obviously, we're talking to Indian music creators, we're talking to Latin music creators, we're talking to hip hop, top hip hop labels and indies, but K-pop is really, really big for us, and we're working with some really, really exciting K-pop producers and artists. So I think that EDM and K-pop are lanes we're really going to lean into, and we're going to explore other. It's based on our community. Like, what do people want? Let us know. We'll get it. We're one call from anybody. It's all about demand. If we could show demand and interest, we can sign anything, because this is ultimately a creative program to the rights holder and to the investor. I can't really say, I guess, because honestly, the things that I dream of, we're going for. I don't want to piss anybody off.
I like this a lot, because this starts to feel like fantasy football, but for your favorite artists and musicians.
And you actually get paid utility wise. But you get paid something with fantasy football.
I've never
like,
gotten paid
in
my fantasy football.
Maybe there's a pool or something, but this is like a direct line. And we're also looking at sports. We're looking at name and likeness rights. We're looking at art. We're looking heavily at art. In fact, we have an art deal we're trying very hard to close. Name and likeness rights are a big deal. And again, athletes, movie stars, film, TV, there's all sorts of great stuff. But music is first. It's the most, I think, easily monetizable and remixable. But it's just the tip of the iceberg.
David, thank you for joining us, man. It's been an absolute pleasure. Have a good rest of your day in out west, and man. Hope you guys close some of those big EDM deals. I like EDM on a casual Saturday. You know what I mean?
I do, and think of all the cool remixing that can happen to bring you to Sunday. It's a whole thing. All right, well, thank you guys. I appreciate your time and for having us on.
Speak to you soon, man.
All right,
cheers.
Bye.
Cheers, man. There it is. IP RWAs remixing.
Oh yeah.
When he says remixing, does that mean like actually remixing the song?
I think so. I mean, look, when someone
I think
licenses
so as well.
the rights, one thing that they can do with the rights is they just play it. But then I also believe they can, go from an example would be, like featuring right in a song as well. I think they can literally remix it that way too. So yeah, I think there's lots. IP is such a fundamental primitive that I think there's lots that you can do to extend that.
We got our boy Bread Guy coming on next. The biggest loud IO bull of the season so far with the graphics. We got a lot to talk about. Got to plug my computer in.
There we go. What's up, Bread?
There we go.
Hey, boys. Officially on the show. How's it going?
What up, Bread?
Welcome. It's good to see you here. Thanks for coming.
Yeah, this is slick. You guys got going on pro style here. You weren't joking around.
You calling in from a new location. I appreciate it though, Bread. You've moved.
Newish. Yeah, like I moved here at the beginning of the year, but like have been getting more and more set up over the last few months. So yeah, West Coast now.
How's the desk set up? I saw you put a lot of effort into it, man.
Clean. I feel like a new man. I got, light over here, light over there. I got, my stand up, sit down. I got my little boogie board to get loose every now and then.
Yeah, man. I mean, we were talking about the kind of nomad travel situation where you're just whipping the laptop up in any Southeastern Asian country and just going at it.
Yeah, that's what it was for like 3 months for me. And I'm getting ready to do a little bit more of that. We're doing the accelerator for Mega ETH. And that means I got to do basically that in Copenhagen for a little bit. And then I got to go do it in Tokyo for a little bit. So
that brings us to our first question, Brad. Brad, what do you even do at Mega ETH? Brad, what is your job?
Did you see my post the other day about that?
Yeah.
So the funny thing about that is like I'm actually literally the CMO. Like I'm the one in charge of doing like the marketing. So I manage a lot of partnerships. I run several of the accounts. Talk about our messaging. All that shit. But the post itself was like chief morale officer because I'm also the guy on the timeline, right? So I'm doing the yapping. I'm trying to like lift spirits, keep things light and fun. So a little bit of both. But the official title is CMO.
Great. Yeah, that's what I thought. You're like the brand face, right? Like the chief shit poster.
yeah. Like trying to do my best Tolley impression. Got to balance shit posting with like technical arguments every now and then.
Well, you do a pretty good job there. I do appreciate how you expand beyond the echo chamber sometimes too. One of my favorite ones was kind of the earnings per employee and how you were able to graph efficiency that way. And you put together this diagram too that showed how Hyperliquid was towards the top. We were talking about Telegram earlier. Telegram's towards the top there. Yeah. And generally, AI is powering like this next generation of companies. Do you employ similar strategies to try to maximize efficiency at Mega ETH, or generally, how do you try to leverage some of these things that you see out there in the wild and put them into practice?
Are you talking about like the AI as tools, or are you talking about like just participating broadly in like other conversations?
Participating broadly in other conversations and generally squeezing the most that you can out of the teams that you manage and the people that you talk to.
So I employ both of those things. One, like if you're not like actually getting comfortable with AI these days, you're just going to get left behind, right? There's a combination right now, or some people are still hesitant to use AI because they feel like it cheapens their work, right? Like they're just offloading someone else, but like, the best people are going to be 10x, 100x because of this stuff, right? Like you alluded to like the loud stuff right now, right? That guy's just a solo dev, but he's able to vibe code all this shit, and like make all these dashboards, do all this cool stuff, experiment, throw stuff on chain. I'm not a dev. I was able to do like deploy a smart contract, have some fun, do whatever. Like if you can lean into this stuff now in the early days, so that as these tools continue to iterate, like if you're not going to do it, you're going to get left behind, frankly. So I always encourage it, especially even within our own team. Like use it for idea generation. Maybe like make sure not to just like throw it out into the world, because I think everyone still has a pretty good sense of what is and is not AI, and that does cheapen a little bit of the perception of stuff. But if you can use it to source your own thoughts, or maybe even like assist your own thoughts, and then put your actual voice on top of it, it goes very far. So yeah, that's on the AI side. And then like the broad conversation shit, I just think that's important for not turning into an ad, right? Like you have to talk about other people and what they care about in order to continuously build up your own momentum. Andy's great at that, right? Like Andy will talk about all kinds of different chains, all kinds of different projects. And whenever you do that, you get engagement from those people. And that kind of plays into the algorithm a little bit, because now this person that engaged with you because you talked about Nillion is going to get fed the content that you just generated about Celestia, right? So like now your content goes further in that sense, and then you expose yourself to different pockets in the ecosystem, because there's a lot of pockets in this ecosystem, and if you're not too careful, you get insular.
Yeah. Twitter is such a weird algorithm, or X is such an interesting, like, just, I've kind of changed strategies over the last couple of months. It's been a bit different, but and I've just seen different results just based on changing strategies. It is a game. Speaking of a game, Brett, I got a random question for you that I think that you'll enjoy. If you were in charge of the Ethereum Foundation tomorrow, what would you do immediately?
I honestly think they're actually on a good path, right? Like trying to be a little bit more relatable and kind of like isolate or distill what they actually want to do. I've been pretty vocal on the timeline about what I think Ethereum as a blockchain needs to prioritize. I think, it needs to scale more. It needs to like just defend itself, frankly, against like all of these things that it's been giving away a value like crazy. And as this ecosystem evolves, we're starting to see execution is kind of the thing that people are driving value towards. So that's, applications, that's, all the things that we interact with directly. And Ethereum lost some of that at on its journey, because it was planning for the 7-year horizon instead of the 3-year horizon. Like you have to answer the middle ground. So they've reshuffled priorities, and they're starting to try to pull in that middle ground a little bit more. And honestly, I think Tomas has been really good about that. He's vocal. He kind of gets in the timeline. He gets in the talking about his vision and what they need to prioritize. I still think some of it's kind of cringe. So like I would do my best to try to find like relatable people that resonate with the Ethereum vibe, and like try to pull them in closer and make sure that is what's lifted up. But honestly, not a ton would change from what they've actually started doing since Tomas came in.
All right, next big hypothetical for you, Brad. You're the GM of Mega ETH. So as if it's a sports team, it's free agent season. If you could sign any 5 people onto the Mega ETH team, who would you sign and why?
From the timeline?
Yeah, from the timeline.
One would be my boy ICO Beast. I think he's crazy with mindshare, and he's still a free agent. I don't know why no one has actually gone after him, although he's alluded to that changing soon. So I would do him. I would like, I see like Jared Watts or like Saigar from Abstract. I think they're really good about throwing in technical stuff and like playful things, right? Like Jared just created the game for like people to hack around and do stuff, and he just post it out on GitHub. People can fuck around. And again, Saigar is really good at technical stuff, so people have mind share there. I think here's a curveball: Nick Dodson from the CEO of Fuel. I think he's just a really smart, genuine dude. I think his product is really underappreciated. I don't know what he's been missing to actually get some attention on that, but I think like he is someone that I really I would be proud to like build alongside him, just based on what I've learned about him on the timeline. What is that? I'd say that's 4.
I think that's 4. Yeah, one more.
Yeah, I would do like another like just crazy social presence person. So I would even do you, Andy, for like getting out there, or like a big name like a Ansem of the world, just to like have someone like that in your back corner. Because like Ansem and Flood from Hyperliquid, just this person that has a big audience and just does not stop talking about shit. And just winning with volume. Although I think ICO Beast kind of fits in that category. So try to distribute it like that.
Yeah, Flood is coming on the show right after you are. So
that's right. Yeah,
may lift his spirits by letting him know you gave him the shout out. Yeah, that's great. And Nick Dodson from Fuel is also a great guy. He's given us a ton of great advice along the way. So it's been an absolute pleasure.
He's really technical, and just like he's technical, but he's relatable. Like he conveys things really well. He kind of gets in the trenches with the technical arguments and really understands this shit. And it's really hard to get people that are that technical, like to his level, that can also like talk like a human. And I think he balances that well.
Yeah, absolutely. Well, I think also Loud is something that's on a lot of people's minds, Loudio. And so, you've been one of the more vocal people about this, probably, just here looking at the opportunity that's looming and all the attention that's garnering around it. How are you positioning for Loudio? What do you expect here? And what advice do you give to people to try to position for it?
Yeah, it's been kind of a tough one for me because like I'm not going to sell my soul and just like spam my timeline, right? Like our brands and the presence in our timelines that we've built up are probably our most valuable assets, like one of them. So like I wasn't going to like cheapen my timeline with just like slop. So I've tried to be productive in how I've actually talked about it, and
yeah, more diagrams.
More diagrams. That's my thing, right? So I was like, okay, it's like, you know what? People don't understand this thing. If they want to understand it, I'll just make some visuals. You know, it's fun, it's whatever. But the project itself is just like, you know, we're entering the Kaido mindshare era. Most of those things have a couple of relationships in them. It's like Kaido and a protocol, and then the protocol and the people who can generate mindshare on the timeline, and juggling that, figuring out how these people can all, you know, convey value to each other, whether it's token allocations or mindshare or whatever. The actual creator, Ultra, who's, you know, dashboard GCR, he's like 1,000 dashboards out there. He created this project or this idea that like, okay, well, what if you just remove the product altogether? And it's just a token that is associated to this project, Loud. And it is just tracking, okay, if this token were to, or the trading fees associated with this token, it gets distributed to the top 25 mindshare people that can generate attraction to this protocol. And it's done in just SOL. So like as traders sit there and speculate on the token because they believe the token will have very good mindshare, right? Because people will talk about it. Fees generated while these people sit there and speculate the token will just be converted to SOL and then pay out to the top 25 mindshares. So the thought is, you know, you have people who are constantly talking about this thing to their audience. And by talking about it a lot, because they're incentivized to do so from all these trading fees, eventually some of those people will be converted into traders. And then those traders will go and trade on the token. And then that will generate fees, which will get more people to talk about it, so like you try to create this little circular thing. And it's just like a little bit of an art experiment to say, okay, like if it is a valueless token, but people will continue to talk about it because it gives them money, like how much is that worth? Like, are people, like, how much are you willing to speculate on that? And yeah, so like I'm trying to see if I can get into the mindshare thing, because like if you run the numbers, the fees are actually pretty high, right? Like the pool that these things have, it's like 4%. And if this token, based on all this speculation, whether you're a trader or a yapper or whatever, generates volume in the levels of the top 10 tokens on Solana, which some are just like straight up shitters I've never heard of in my life, then you're looking at payouts like for the top 25 people in like the mid 5 to sometimes 6 figures for a week of tweeting. So like, you know, if I can get in that without being a degenerate slop poster, then I figured I'd try and throw my hat in the ring.
Yeah. I've kind of felt the same way. I've thrown a little bit of tweets out there, but I've just, it's hard to, with all the yapper mindshare boards and rewards. It's just, I don't know. You want to walk that line between being like this billboard, you know, for incentives versus just having that authentic brand. So yes. Yeah, but sometimes the opportunities just are right there in your face, right? And so you want to kind of tackle those.
Yeah, like, and honestly, like until I put out the numbers and saw like what had come out, I was like, man, like you could sit there and like complain about it and say like, oh, this is annoying, and then forget about it in a week, or you can actually just like lean into it and maybe get, again, the top 5 people may it like. Again, if it does crazy numbers, like who knows? Like there's a total potential that the traders don't want to speculate on this at all, and it generates minimal fees. But imagine the week 1 run up, given the mindshare that it has, like you could see, you know, upwards of like mid 6 figures for the top 5 people.
Yeah, that'd be insane. And Ultra's number 1, of course.
Yeah, no chance. He's not ending number 1. He's going to potentially get, you know, $1 million.
Yeah. Yeah. Couple of things about Mega ETH for you. I'm curious what you think is Brother Bing's unique advantage and how this gives Mega ETH an edge. Like what is her special trait, and you know, how has this contributed to Mega ETH's success?
Yeah. So for people who don't know, Bing is like the business founder of Mega. We have 3 founders: a CTO, the CEO, and then Bing is the business side. Lei and Yilong are the other 2. I would say her unique skill is that she's not like super trenchy. Like, and what I mean by that is that she looks at things with mostly fresh eyes and says like, why shouldn't we aim for bigger Web 2? Like all this stuff, like the stuff that like you think is often cliche, or at least whenever I hear it, I feel like it's cliche from most of these people where they want to target Web2, but she genuinely believes in that kind of stuff. So whenever I sit there and I'm posed with a question, I usually box it into like a blockchain versus blockchain thing, and like how is Mega ETH positioned to do better than whatever? Who is Mega ETH targeting? I'm like, oh, they're targeting, you know, DeFi users who are like to perform a blockchain, like the Hyperliquids, the Solanas of the world. Like that's where my brain goes, and then she just defaults to like, you know, outside of that world, right? We're talking college kids, we're talking, you know, people who you know, watch TikTok and like that's their source of information. So like this Web2 brand stuff, or Web2 brain stuff. So I would say her superpower is being able to talk about or view the chain in that light, but then also being technical enough that she can actually convey like really complex lower level stuff about the chain, you know, real-time blockchain. Like that's us. Like, why is that the case? Why is that important? What is that relative to the field? She can talk about that while also having that Web2 brain. Just relatable.
As you mentioned, it's like, you know, being able to talk like a human and then also kind of speak the CT language. And, you know, as crypto expands into some of these more mainstream, you know, niches, that skill becomes increasingly more important.
Yeah, I think just like thinking outside the box as well, right?
Yeah, and like you've seen that with a lot of our go-to-market strategy to this point, right? Like most of the stuff that we've done is a little unorthodox relative to the field, right? We did the Flufflement, we did the Echo sale, like a lot of that, you know, some teams have done it, but they haven't done it the same way. And most of that comes from this constant desire to like not just like get comfy and do the same thing that everyone else is doing because everyone else is doing it. It's like, okay, we did this. How do we do something bigger, better, different, right? How do we change the perception? How do we do so constantly being in that frame of mind has materialized in like basically how we've gotten to where we are.
Brad, last thing for you. What's the process for going into the forest and taking nude pictures with your girlfriend of your tattoos? The community wants to know.
I had to buy a tripod specifically for it.
You woke up that day, you said, I need to get a tripod so that I can go take this picture.
No, we were doing like, you know, we had just like started doing it just because, right? So like for the background, for anyone who doesn't know me, like I'm working on a bodysuit. So it was just like whenever I was getting it, I even told my artist when I was doing it, I was like, I have this dream because I was living in Norway when I started. It's like there's beautiful mountains. There's all this beautiful like natural shit. And like what's on me is not natural, but it's still beautiful. And it's like I always had this dream of like I want his beautiful art on me. It has to be naked because it's a bodysuit, with the back painting of like beautiful land. I was like, that just like always was like a goal of mine. So it's taken a long fucking time to get this tattoo. So I've just like progressively, as it's been done, I've just started doing it. First, it was like setting up this phone on a rock, and then it was doing all stuff. And I was like, it's kind of annoying. So then, I was like, all right, we need to get a tripod. We need to like actually take this a little more seriously. So it's evolved.
It's so funny, Brad. Thanks for joining us, man. Hope you continue on the pursuit of the bodysuit. Looking forward to more updates from Mega ETH. Loudio is going to be wild to watch the next couple of days. Yeah, man, keep cooking, man. You've been crushing.
Thanks, dude. It's been a pleasure.
Cheers, buddy. See you soon.
Thanks, Brad.
Yeah. Here we go. Bread guy's in the house. That's like, imagine you're just like on shrooms or something, or just like walking through the park and you just see Bread guy with his bodysuit, and it's just like, yo,
so funny.
What's going on,
so
man?
Funny.
That'd be just hilarious.
That's great. Yeah.
I'm pretty excited about Mega ETH. I was going to ask about the NFT stuff, see what's going on, but I didn't get a chance.
Yeah. I'm excited for our next conversation here with Flood, the Giga Whale Hyper Bull from the Hype ecosystem. And I think he's going to join us in a little bit. So, we'll switch gears here. And hear from Flood in a little bit. I think he's coming up.
Yeah, man. Should be good. Hyperliquid's been on a great run. We've got James Wynn. This trader is just absolutely blowing his entire stack on 40x leverage long on Hyperliquid. It's been insane marketing. Obviously, Flood is quite bullish on Hyperliquid itself. So excited.
Now, we should make a disclosure here, Andy, that we are participating in Hype on the liquid market.
For sure.
We are bagged up for better or for worse. And I think We're going to hear from Flood here very soon about what's going on, what has happened recently. It's had quite a run, and everything that's going to be coming up here soon. Here he is, Flood. Welcome to the show. We'll get you unmuted in Google Meet just so we can hear you. All right. And
what's up,
how's it
man?
going, guys? Hey, thanks for having me. Happy to be here. I want to make a similar disclosure. Obviously, I own Hype. Very, very bullish on Hype. We'll be talking our book, and obviously, I run in Silico Terminal as well. So, any promotion of usage of that platform, I may be slightly biased. I'll put it that way.
Man, I gotta ask, Flood. Rob and I have been following accounts like yours and yours specifically since probably late 16, 17 into the 18 cycle, and you've had the singular PFP for so long. Man, what prompted the change, man?
I think we're undergoing a fundamental shift in crypto.
Okay.
I think we're finally seeing the rise of long short actually mattering. And retail that's been able to stick around has grown up. I mean, we've all kind of grown up together since 2017.
Right.
And I think now we're no longer bamboozled by, people writing venture checks or all of this vaporware or all of this, sort of fluff around infrastructure and this dream that was promised back in, 2017, 18, either Delta days of permissionless finance. I think we've seen that there has to be trade-offs and compromises, right, to make sure that user experience is comparable. And that's where we're getting to. I don't want to go too deep into it. There's some deeper lore as to why I changed the profile picture, but I think we're undergoing a regime change in crypto. People are tired of being fed bullshit. That's the reality. Like, people are tired of being fed these overfunded, low economic utility, low general utility tokens. And that's why you're seeing such a surge around Hyperliquid and other, I think, things that are capturing, market share by doing things right on multiple levels, both from a product perspective, token design perspective, and fundraising perspective.
Yeah, I mean, we were just talking about Echo's Sonar release for kind of bringing ICOs back in some capacity. Obviously, we've gone through an entire, the infra bloat, the FTV, there's been an entire transition. So, I think we're getting closer back to the crypto ideals that, as you said, that we were kind of promised. So don't need to harp on that. But what I think a lot of people want to hear about is this James win and your take on this. So for someone to be up 80 million on Hyperliquid, the $1 billion position open, obviously 40x long short, kind of been flip-flopping, then now close to negative, reloaded another $250 million last night in long. What is the psychology of a trader like James Wynn? It took him 70 days to go from 0 to 87 million, and then 5 days nearly to lose it all. If he was listening right now, what would be your message to him as well? And what do you think his psychology is?
I think we're very fortunate to be able to view this stuff and this access, this data being accessible to anybody for completely free. Like, before, only a select few of centralized exchange insiders and account managers were able to see and potentially leak info on large accounts and their P&L and how well they've been doing, right? Because that data was completely private. And now we're able to, watch people impale themselves on leverage if they choose to. But I think the perspective of someone like James Wynn, I don't know that I have any advice for them. I think their path is pretty preordained. I think they're going to do what they want to do, and they want to gamble. And it's your right to gamble, right? And I don't think there's a greater casino in the entire world than Hyperliquid, because if you want to place $1 billion bet and have it be verifiable, provably, and have everybody in the world be able to tag along in real time as to what your P&L is, there's no other venue that can facilitate that other than Hyperliquid. Theoretically, you could, buy $1 billion of ETH and deposit into MakerDAO and leverage up, right? So there are other venues you could do this on, but those aren't as sexy, and they don't offer the same amounts of leverage that Hyperliquid does, or that quick dopamine rush where he was getting in and out of $1 billion positions. I tell him, I think, if your goal is to get a lot of attention and you truly have an infinite amount of wealth, he's probably doing things optimally. If he does want to make money, I think he should be a little more particular about how he's executing, because he is just losing a lot of expected value that way. But some people don't care. And I think we're lucky to tag along to this degenerate's ride, before it's really only CZ and his crew who'd be able to view a position like this, and I'm sure they have a dashboard with all this stuff at Binance headquarters where they view all the large whales and their liquidations and their risk. But it's we're really fortunate, actually, and that's kind of one of the coolest things about Hyperliquid is access to data. It's completely free. It's a level playing field for anyone trying to use positioning data, leverage, trade data, historical P&L as actionable alpha. Anybody can do it.
Yeah, back in the day, it was just Arthur Hayes counter trading everyone on his insurance fund who had access to this data. You recently went back and forth with Arthur a little bit, just kind of setting up. I think he's also on the hype train. How what is that like? Kind of going back and forth with Arthur. Used to trade on BitMEX. Now with Hyperliquid, you guys are on the same team. How has that dynamic changed?
I mean, I've been lucky enough to, I've been fortunate enough to consider some of the BitMEX founders, I would say, friends, and work with them on some things. I respect them a ton professionally, and I don't think they get enough credit for really pushing the perpetual swap as far as it could possibly go with 100x leverage and all of the early infrastructure that they built. It was pretty crude. I think BitMEX's infrastructure, I think I remember it being 70 orders per second, not trades, but orders per second back in 2017, 2018. So it's kind of a miracle that they were able to facilitate as much volume as they did. But they also don't receive enough credit for never, knock on wood, having any security issues or any hacks for user funds. I think that in this day and age is almost the only thing that I really care about from an exchange side. And the fact that they haven't, I think they deserve a lot of credit for that. They did things correctly. They implemented best practices, and they're extremely talented and bright individuals. And, but yeah, I mean, Arthur's someone, he's a hero of mine, I mean, he's pulled out, some of the largest capital in crypto in a fairly ethically way by building a product that everybody wanted. I don't think there's any better way to make money in crypto. And, credit to the BitMEX team. And yeah, they've lost a considerable amount of market share, but, they sort of live on to fight another day. But there's no one better to champion Hyperliquid than someone like Arthur, who recognizes how high stakes these exchange games are and how much money is on the line. I mean, I'll say this, and, my figures could be slightly off because I don't have detailed data, but people fundamentally misprice Hyperliquid. And Arthur is one of the people who actually has the best pricing and probably the most edge on it. And there's a reason why he's so bullish. It's because people don't realize the global perpetual swap market is anywhere from 20 to $30 billion in revenue a year. I mean, Binance conservatively makes $10 billion a year in revenue, right? Not net profit. They're not as lean as Hyperliquid is for many reasons, but Hyperliquid does about 1/6, 1/7 the volume that Binance does on perps. Sometimes less, sometimes more. Let's call it 1/10 for easy math. If Binance is making if Hyperliquid is making $1 billion a year, that puts Binance at which they have higher revenue per user at conservatively $10 billion a year in revenue. And that's just from perps. That's not including spot. That's not including their yield products, revenue from the launchpad, their mark-to-market value from BNB. So we're really seeing, I think, the unbundling of Binance in real time via Hyperliquid and all of the things that Hyperliquid will enable, from builder codes to HIP3 to self-custody to protocols built on top of it, front ends built on top of it. Binance is many businesses rolled up into one. And this is sort of the unbundling of that, I think, which is incredible to see in real time.
So then if we were to ask then on a follow-up to that, like what you think is not priced into Hyperliquid, would that be, is it mostly around the way people are thinking about it, or is there like technical or roadmap or kind of other items of hype that people are not kind of thinking about and that aren't priced in? Or is it just mostly the kind of thought process around how to value it?
Yeah, it's an informational asymmetry, right? When you're thinking about both the buyback machine, that's easy to quantify, but what's hard to quantify is the amount of growth that Hyperliquid can experience, because liquidity begets liquidity, right? Market makers and traders are pretty neutral when it comes to the venue they trade on. Like, I trade on multiple different venues. I trade on Binance, I trade on Bybit, I trade on OKX, and I trade on Hyperliquid, and I trade on chain, right? So, you know, valuing Hyperliquid comes from, or the reason why there's an informational asymmetry is people don't realize just how profitable these exchanges are. Coinbase has obviously a different model where they're a much higher take rate, and they're charging 60 basis points out of the box for spot, but they have 6.5 billion in revenue a year, and a few billion of that comes from trading, right? So Hyperliquid is still in the very early innings of its potential growth, and people are not valuing the token appropriately, in my opinion. We're still buyers up here. We've still been net buyers almost every day, right? And we have topside vol exposure, so obviously I'm biased. But yeah, happy
there's
to
been
elaborate
rumors,
on it.
Flood, that there's been rumors that you've already dumped well over 8 figures of hype.
I mean, people. I mean, I can say that that's definitively not true. But there's a difference between being a net seller on one venue and using it to market make. We actually haven't been market making much of the hype spot, so we haven't been net sellers generally. Have we sold some at times and bought it back? Yeah, I mean, I'm a trader, right? And the purpose of investing in trading is to buy things low and sell them high, right? And your time duration for doing things may differ, right? I may buy something and sell it a minute after. I may sell something and buy it back a month after, right? I mean, it's your right to buy and sell assets whenever you want. But
No, I'm not saying that it's a problem.
Of course. Yeah. I mean, I don't know.
I just want to clear the air here.
People love to speculate on things. We have been, and it's easily verifiable if people have any amount of on-chain diligence, like much larger net buyers than net sellers of Hyperliquid. Plus, we have millions of dollars worth of premium in Hyperliquid call spreads, right?
Yeah.
In high call spreads. So, that's
Arthur
as
was asking
degenerate
me about that as well.
That's as degenerate as it gets for upside exposure.
So I think there's a bit of a war going on right now. Hyperliquid and Solana. Basically, my perspective from the technical lens is Solana's gone out and be like, well, Ethereum's slow and expensive. We're just going to create a bit more of a centralized, faster, cheaper chain, less validators, scale it up. Hyperliquid came in even more on the logical extreme, was like, well, Solana's not going to do it for a highly performant perp stacks on chain. We're going to do it this way, less validators, way better execution. And you put out a tweet saying that just like ETH, Solana is fundamentally uninvestable. I think this Hyperliquid and Solana dynamic is getting a bit stronger over the last couple of weeks to months. People are talking about hype flipping Sol. What's your take on this dynamic right now, and why is Hyperliquid, in your view, much more investable than Sol?
I'm gonna sound pretty controversial and inflammatory here, but I think a lot of my views are rooted in examples from traditional finance, and they're not always directly corollary, but I think they do matter in this example. I think most L1s are commodity businesses. And if you want to own commodity businesses, that's fine. They tend to do pretty well. Railroads are still businesses today, but they are commodity to some extent, right? And the person that is shipping goods does not care which vehicle they ship on, whether it's boat or train or truck or camel. They just care that it gets to the destination and that it is as efficient and cheap as possible, and it fulfills all of the things that they are optimizing for. Users who will use blockchain technology knowingly or unknowingly to trade and transact values will not be deterministic for which chain they are using. In fact, they may not even know which chain they're using because it will be wrapped in a wallet or wrapped in a front end or wrapped in some sort of very pretty UI that lets them do things more efficiently, right? So what do I mean by this? You can imagine that trading for a business like Robinhood, which is a front end, right? And front ends receive the majority of value in traditional finance. If you take the market caps of front ends, what do I mean by a front end? Robinhood, Interactive Broker, right? Vanguard, Fidelity, Schwab. Schwab has 10 trillion of assets under management. These are front ends essentially that allow you to plug into all of the matching engines and trading venues all across the world, right? And well, specifically for the US, but theoretically all across the world. The user doesn't care if they trade on NYSE or BATS or NASDAQ or CME or CBOE. They just care that their order gets filled, right? And they care that it's the cheapest and fastest to get filled with the best, ideally, user experience as possible. I look at blockchains very similarly, and I think blockchains are a very dangerous bet because you're inherently betting on technology not progressing and you not getting leapfrogged by advances in tech. That's what happened to Ethereum. Ethereum, and again, I'm not a blockchain researcher. I don't really care about layer ones. I think they are commodity businesses. I'm more interested in the front ends that will actually own the user. But you can imagine a user executing through Robinhood. They have no idea what chain their orders are being routed on. They have no idea what venues their order is even hitting. The order could be multiplexed to multiple different venues. It could hit Coinbase and Binance and Hyperliquid and a Solana AMM pool, and they would have no idea because they are basically just trading and using and thinking about their order execution through Robinhood. And Robinhood will not care what blockchain in most purposes will power this type of trading. So these really are just commodity businesses. I don't understand why an AMM is a moat. An AMM is a constant product, right? There is nothing revolutionary about putting two equal amounts of an asset into a pool and having it rebalanced. There is nothing inherently that is impressive about this or that is a moat. And if you believe that chains will get faster and cheaper and potentially more decentralized, then fees should also go down to zero. And people keep saying, well, network effects will make it so that this chain is valuable and there'll still be a layer one premium because people will want to use Solana or they've solved UX. No, they haven't. It's the front ends on Solana. It's Phantom Wallet that owns the user. Users don't even really understand if their Solana was wrapped in the back end, right? And then shifted over to another faster, cheaper chain where they got better instantaneous settlement. And then when they inevitably make a withdrawal or a transfer, then it's unwrapped and transferred back to the chain of origin. There is no way that users will, I think, be voting with their wallet because of a certain type of chain in the back end that they don't even interact with themselves. That's why I think these are commodity businesses. And I don't see how it's not a race to the bottom either, right? Like when you have custody over funds, it's a moat. Because you can enable different types of trading at low cost or no cost or micro loans and other types of, inter-client payments and margin lending and capital efficiency usage. Like blockchains don't really do this, right? So anyways, I'll let you guys, I have pretty strong views on this.
This is fundamentally an argument for the fat app thesis.
Mm-hmm. Yeah, absolutely. Yeah. And you just have to look across the river at TradFi and understand that the aggregate market caps of these front ends of Interactive Brokers, Schwab, Fidelity, Vanguard, Robinhood, Webull, etc., are larger than CME, NYSE, NASDAQ by a factor of 2.5x, 3x. So the value does go to these because they actually own the customer. And, that's why I think Hyperliquid is actually very smart for saying, no, we don't want to go for the entire pie. We are fine with someone building a front end, users not even knowing that Hyperliquid is the base CLOB or liquidity layer and being essentially just the best matching engine and central base of liquidity. You can own the user. You can add additional features and fiat off-ramps and all this other stuff. We'll let you own those businesses and monetize them and differentiate how you want. But we will be a commodity business, but we're fine with being the best and most efficient one that lets you monetize, right? And Solana might win might win, the L1 war. That's fine, but I don't think that makes it worth $100 billion.
Yeah, that is. I appreciate the candid thoughts there, because I think that if you're going to put the elephant in the room, you might as well say how you feel. And what's important is that you're backing this with in silico, with your personal brand, with your investments. And so, I mean, this war is going to rage on. The Solana people would say otherwise, and they would clap back and just talk about centralization, or talk about lack of an ecosystem, et cetera, or different metrics like REV, ways to value these things. But we can save that one for a different day. Curious more, again, going deeper into Hyperliquid's evolution. You spoke a little bit about builder codes, but I think it's important to understand what builder codes really unlock for the Hyperliquid ecosystem. Maybe you could just kind of give your thoughts and your take on what builder codes really unlock for Hyperliquid.
Yeah, I mean, it's very simple, right? So if I had to build, for those not familiar with what in silico terminal is, we are an execution system where, financial tooling it's typically called an OMS, an order management system, or an OEMS, order execution management system, to facilitate better trading for free for retail users, right? Basically, I mean, any user could use it, but primarily our users are retail. We're essentially a reskinned UI for all of the top venues, and we give you access to differentiated order types. So what does that mean? That means TWAP, VWAP, limit chasing. You can fully customize your UI, so it looks exactly the same and it's uniform across different venues. You can trade on multiple venues at the same time from one consolidated UI, and you can imagine most serious traders see tremendous benefit from using this type of software. It's all completely free. We receive affiliate and broker commissions, which is basically like rev share from the exchanges. And we don't collect any user data, personal data, PII, stops, P&L orders, anything, because privacy is our first and foremost focus. I think builder codes, what they enable at the core is a way for you to permissionlessly monetize. And that is important because this is what most blockchains enable, and is the reason why they have, I think, accumulated quite a bit of trading and speculation and incentivization to build things on top of them, as opposed to building it on top of Coinbase or building it on top of Binance. If you were to build some sort of execution tooling, which is basically one of the primary use cases for builder codes, if you wanted to charge an extra basis point for your Binance customers, you either have to ask permission from Binance and they will tell you no, right? Or you have to find some sort of high friction way to charge the user themselves and settle up a bill. You basically have to invoice them, which is horrific, because imagine you have a losing trading month and then I send you a bill for 30 grand for your execution for that month. You're not gonna be very happy, right? So that's why we've kept our business free despite being able to charge for it. I think it's important for this to be just a net good, like a general net benefit for most crypto users. And we have other plans once we accumulate enough flow. And we want to own all of the execution. But what builder codes enable me to do is, if I wanted to, I can charge 1 basis point or 10 basis points if I thought I could get away with it. And Hyperliquid can't stop me, right? And that's never been possible on any CLOB in history. Like if you were trading options on Deribit and you built a really cool options trading bot or something, or you built really cool analytics software and you had execution bundled in that app, you have no way of charging other than through the gated broker and affiliate programs on centralized exchanges. Most people don't understand this, but you're basically at the mercy of CZ waking up one day, which he has in the past, and saying, okay, 50% of your users, you actually can't monetize them anymore. He slashed monetization from VIP4 to VIP2. So Binance, went from one of our most profitable venues to facilitate trading on to one of our least profitable venues to facilitate trading on, right? And they do this randomly because you're in their sandbox and it's their right to, right? I mean, it's just business at the end of the day. You don't take it personally. But Hyperliquid is allowing for the first time on derivative trading the ability for you to permissionlessly monetize yourself. And that is incredibly valuable. That's incredibly valuable. And most people don't understand why, because they haven't tried to build a product or thought about what monetization looks like. But this will enable, and this will coordinate people to build exclusively on Hyperliquid. Even if Drift adds broker codes, even if DYDX adds broker codes or builder codes or some sort of revenue sharing program, they don't have the user attention and volume. Hyperliquid is already too far ahead of them, right? So this will enable products that we haven't even thought of yet, and will incentivize that sort of speculation and time exchange for time to build a product, because you can actually have some sort of monetization on it in a way that has never been historically possible.
Flood, thank you so much for joining and talking Hyperliquid. Just one last thing for you. Do we think that there's a world where Hyperliquid flips Binance and perps volume in 2025 or 26, or what's it going to take to get there?
It's impossible for it to flip. Well, not impossible. Nothing's impossible, but it's very unlikely that it flips Hyperliquid Binance volumes in 2025, just because Binance has such a commanding lead on the spot market.
Yeah.
And spot and perps go hand in hand. Additionally, there are some other capital efficiency things that Binance extends to you due to them being like fully custodial and stuff, that enables better capital efficiency and higher rates of leverage for certain market makers. They also, and I don't have any proof of this, but I can imagine that if you're an extremely large trading firm, they'll issue you credit knowing that you have a balance sheet of $1 billion or something, and they've audited you or something, that they can extend a credit of 50 or 100 million. Like Hyperliquid will never do that. Like Hyperliquid won't even pay 30 grand for their TradingView implementation, right? Like Hyperliquid has a strict policy of not paying anybody for anything ever. So the people that are talking about James Wynn being marketing, they're as far as I know, it's a lot. And I would bet a lot of money that it's a lot. But in 2026, it's entirely possible, because Binance is in a really tough spot. They don't do regulated trading better than Schwab or Coinbase does, because they're inherently not a US Nexus company. And they don't do, permissionless trading or push the boundaries of finance and maybe open up discourse around, KYC and permission. Like Binance is inherently a permission entity with a lot of baggage. So I think 2026 actually looks pretty rough for Binance, where in crypto, you get killed when you're in the middle. Why did Ethereum lose to some extent, right? It's because they tried to be both Bitcoin and Solana. When you try to do two things mediocre, you typically end up atrophying substantially, right? You need to focus on doing one thing the best, and then add other types of edges and products and features. And that's just pretty standard, like first principles thinking. And I think Binance is in a tough spot. So 2026 could look very different. 2025, Binance spot market is the only spot market in the world other than Coinbase's that matters right now.
Flood, thanks for joining, man. And best of luck on your hype journey. We are riding with you. And
well, glad to hear it. It's the only asset that matters in crypto other than Bitcoin. Like, it's very simple. It's very, very simple. Nothing else makes money.
Speak to you soon, man. Cheers.
Thanks, Flood.
That is the Hyperliquid Mert right there. Up next, we got Rip, the guy, the man, the core community of Rise Chain and Ethereum, Gigable, almost like to the extent that Flood is on Hyperliquid. Looking forward to talking to Rip. Flood has some very strong opinions.
Absolutely, he does. I mean, it's great to hear. It's really no different than what we see on Twitter. But I think he's got a very consistent thesis with centralized and decentralized exchanges overall. So it's interesting to hear not just hype bull, hype bull, hype bull. There is a much more well-rounded thesis at play here. I'm just going to put on my headphones here to make sure that we're good to go for this last segment. This has been a super fun show. I'm really jazzed up about this.
Yeah, man, we got Rip coming up. Last one. We're definitely getting into the marathon territory here. Let's get Rip up and get Robbie tuned back in. Yeah, man. I mean, the Solana Hyperliquid war is quickly turned away from the Solana ETH war and is quickly turned to the Hype Sol war. I mean, I think from price performance wise, obviously Hype has done better and probably continues to. But those two communities, I also think that when you're on the rise, you tend to get a bit cocky as a community. But then when you're on the fall, other teams can kind of like kick you while you're down. But I think this time around, the Hyperliquid community has done a much better job of actually, being receptive to, kind of winning. And so I think that's been good to see on the timeline.
That's one through line between all three of these communities that are sort of orbiting around. You've got, Ethereum, Hyperliquid, Solana are sort of the communities that are capitalizing on the most attention these days. These are the most organic grassroots communities at play here. Add Bitcoin into that as well. And I think it's no surprise that these are communities that stick around because there's longer term theses. You look at a project that, it isn't full of airdrop farmers and Kaido yaps. These are guys that kind of go by the wayside. But, there are long-term projects out there that are building real tech. And sometimes it takes time to realize that. And then we've got real communities that are grassroots, organic, and weren't bought, right? These are people that believe in the tech and believe in the community. So we're here with Rip, the Ethereum community member and Ethereum champion. It's good to see you, Rip.
Andy and Robbie, excited to be here.
Yeah, man. How are you? Nice milady.
Hey, thanks. Yeah, I'm really great. How about you guys?
Yeah, doing well. You're the last guest on the stream today. We've got learnings from 50K TPS scaling Ethereum. I think the thing that I want to start talking to you about is the diagram that you put out a couple of days ago. It was of the Ethereum logo, and you had like the top triangle and the bottom triangle as different parts of like the services that Ethereum can offer. And we're really pushing towards more of like this kind of full stack approach. So maybe you can just walk us through your thinking there as to like these core services and kind of how you're seeing that come together for Ethereum.
Yeah, for sure. Yeah. So the current rollups today are using settlement. So this is what makes an L2. So settlement on Ethereum. The other aspect is Ethereum DA, which is great. And then the two other services that I added, these are coming. Some exist, like for example, base sequencing. So base sequencing is using Ethereum sequencing. So it's validators as your sequencer instead of a centralized sequencer like most L2s have today, which means you can inherit Ethereum's properties like decentralization, liveness, censorship resistance, and it will enable synchronous composability with other L2s and the L1. I would say this is one of the biggest pros. We can maybe talk about that later. The other service that is not ready yet, but it's coming. It's been talked about from from Justin and so on. It's the native execution. So this is about using Ethereum's EVM directly instead of an emulation of an EVM. So you often see it's a chain which is EVM equivalent. But in that case, with native rollup, you're really literally using the EVM from Ethereum. So what that does is it reduces bugs because you're getting it out of the box. It's pretty much like a one-liner to get it working. And so you get updates out of the box. You don't have to roll your own fraud proofs, which is a really hard thing to do. It reduces trust or increases trust assumptions. So for interop, you're basically becoming trustless, which increases the security of other chains you want to interop with. So basically these are the four pieces, which I think is the end game for rollups, which will bring them closer to Ethereum. Which means, you're inheriting Ethereum's properties. And I think the value accrual is going to be a bit better because you're using literally Ethereum services. And with interop, I think people are going to understand a bit more that it's a whole, like all L2s are part of the Ethereum network instead of competing in a sense against it.
Yeah, that certainly seems like the direction that we're headed. We've gone back and forth on the dynamic between Ethereum's L2s and its L1s. Ultimately, bringing these L2s closer to the L1 does seem to increase the value of the whole pie. I'm curious what that does to L2 tokens, right? As they become more integrated into the L1, but a lot of that still remains to be seen. As we develop more and more apps and utility on these L2s. I'm curious what kind of new use cases you think are going to be unlocked as we scale in terms of TPS. We had Bread from Mega ETH on a little bit earlier. You're representing Rise Chain, and I think you guys are collectively two of the more prominent L2s that are really pushing the boundaries of throughput. How do you think throughput is going to manifest itself in some of these next generation applications?
Yeah, I think it will enable the next generation of dApps with the speed and experience of Web 2 or like centralized exchanges. And so if you have the low latency of Rise, for example, I think it can unlock a lot of potential in like DeFi 3.0, I would say, or gaming and so on. So you can think of like instant oracles or VRF. And so I think that it's really something that the space should work towards too, so that there is less of a gap between Web3 and Web 2. I mean, we want Web3 to be an improvement over Web 2, so the experience should be as good or better. And I think that speed is one part of it.
Rip, what's your hottest take on the current L2 landscape today?
Interesting. I think the one problem is the centralized sequencer, which we just talked about. So I think that base rollup is going to solve that. I think the other problem is fragmentation. I think that fragmentation is solvable, and it's being solved right now. It's like in the EF roadmap for the next 6 to 12 months, they have like the open intense framework that most L2s are part of. And the end goal is that Ethereum should feel like one chain. When you go on an app, whichever L2 you use, you shouldn't have to bridge to it. It should be able to pull your assets from other L2s and the L1. Same for trades. Like you should see an aggregated balance per assets in your wallet instead of being spread across a bunch of L2s. And when you trade, it should just work with assets on all these L2s. And it could actually be more optimized that way. So it gets the most optimized route. And I think like intense is the first step. Base sequencing is the next step. So I think the biggest issues right now with L2s is fragmentation. I don't know if it's a hot take, but yeah, this is it. The other is like speed, which I think that Rise and Mega 8 were both, I think, next gen, and not only L2s, but chains in terms of latency and speed.
Absolutely. I'm curious from a broader Ethereum perspective. We've seen the Ethereum community embrace this new renowned vision of the world computer. That was sort of on the fence for a while. To you, what is the world computer, and why is it important for Ethereum to achieve this vision?
Yeah, I think there's been a lot of different narratives.
That's right. There definitely has.
During the time of Ethereum, I think world computer is one. One that I like to talk about is the Internet of Value, which I think they're really similar. It's just a different analogy. But I think the world computer works with my diagram that we just talked about, which you can use services from Ethereum and build apps, both apps and L2s and smart contract and so on. I think I like the Internet of Value analogy a bit better because I think that Ethereum is like the L1 is the base layer or the protocol, which I like to compare to TCP/IP from in the internet. and it's credibility neutral, it's censorship resistant, has 100% uptime. I think it's the best base layer you could have. And then anyone can build not only apps but also chains on top of Ethereum. So it's horizontally scalable like the internet. This is like the fundamental difference with other L2s or other L1s. The L2s will become again synchronously composable and interoperable with each other, which will become a network of networks. So that's why I like to compare it to the Ethereum is the internet of value. That's what I like to say.
Yeah. I think the World Computer was actually in one of the first Ethereum marketing videos ever released on YouTube, which is pretty funny. But yeah, it seems like we've kind of gotten away from that. One thing that we have in here as the headline, which is the 50K TPS. Recently, I saw something from you guys at Rise about 50,000 transactions in a single block. What makes this possible from a tech perspective, and why is this important to everybody in the space?
Yeah, I think it's pretty funny. The 50K transaction is a single block. We don't know who did it. It wasn't us, but I think it proves that we do have 50K TPS on testnet right now. Our target is 100K. But yeah, there are multiple things that enable this. I think that the engineering team is amazing. We started with the OP stack and the optimize every corner of it. They spent like 18 months trying to remove the bottlenecks. And it was originally built for 100 TPS. And so 50 TPS is a lot different. The other aspect is the DA. So we know that Ethereum DA is limited right now. It's being improved on with the blobs upgrade and pure DAS and Dank sharding coming, but right now we're using Celestia, so I think this is giving us a big boost. And so yeah, this is mostly it. And in terms of like the other aspect is more latency, but yeah, we do have shreds, which is a big reason why Rise is faster in terms of latency.
Yeah. Could you explain shreds like Eli 5? Because I kind of understand it, but I'm not really fully up to date on exactly, because I know Solana has shreds as well, but I don't understand exactly what it does.
Yeah, it's basically a pre-confirmation, right? An economically secure pre-confirmation. So how it works, it's basically like a continuous block building pipeline where transactions are processed as soon as they land in the mempool. It's really a new architecture for like this for sequencing. Existing L2s, they have discrete blocks. Rise is continuous blocks. So what it means, it's just you have a faster experience for the user. It's pretty much instant, right? We have 5 millisecond latency. It's as real time as it gets, pretty much.
Yep. This is obviously a significant value, proposition and use case for chains and applications that are running on these chains. Just before you rip on, you came on the show, we had Flood, the Hyperliquid bull, and he was kind of positioning this argument for the fat app thesis, right? Where it's, about owning the end user relationships. Wallets have this, applications have this, and it doesn't necessarily accrue value to the base protocol. Would you agree with that take, or representing Rise Chain? How do you sort of analyze this and reconcile this with value accrual flowing to the base protocol?
Yeah, I think it's a bit similar to the L2s. I think that I've talked about this, but once we have a really interoperable network within Ethereum, I think that anything that grows a network, everything that makes it stronger, will end up accruing value to Ethereum. And I think that apps are similar in a way. I think that with interop, I think most apps are going to be cross chains, and I think that most assets are going to be tokenized on the L1 itself, and then you can use them within L2s. So I think that it all comes back to ETH and Ethereum, in my opinion. I don't think that. I mean, for sure, I'm sure that apps are going to have tokens, L2s are going to have tokens. So these are more specific ways to invest in those companies if you think that they'll grow. But ultimately, if you want to invest in the whole ecosystem, I think ETH is a really good way.
I like the mental model you describe of most assets living on the L1, going and moving the assets to a particular L2 for some action, and then moving them back to the L1. And I think especially with the snarkification and the ZK proofs and acceleration that we're seeing, this is going to become increasingly possible. We've already reached some semblance of real-time proving, which is, proving these things in one Ethereum block. I think if we can send them out, do some transaction with them on an L2 and send them back all within the same 12-second Ethereum block, then we really have the use case and scale that we're looking for with on-chain applications.
Yeah, I think real-time proving is huge. I mean, we thought that Ethereum couldn't scale without compromising on decentralization, but I think with the improvements of ZK, it's becoming possible. I mean, Justin has talked about and Denkrat and others. I think that 10K TPS is possible on the L1. And I think it's going to enable, it's going to improve like the settlement between L1 and L2, which is going to help synchronous composability. Also, I think it's going to help bringing post-quantum security to the L1. And I think the main goal of this, of scaling the L1, I mean, some people think that it's in the roadmap, right? Scale the L1. Some people think that Ethereum should go to the path of other L1s like Solana, right? Of just having one L1, but I don't think that's the goal. I think that we want a strong layer 1, which still has a lot of TVL. It's dominating stablecoins, dominating DeFi, and so you want to keep those customers, those users on there. I think Ethereum, the L1 is slow right now. There are ways to make it scale, and ultimately, all of this is gonna end up improving rollups and synchronous composability, which we want. So yeah, it's good all around.
Rip, thank you so much for joining, man. I appreciate your bullishness on Ethereum. I think it's tough to be bullish on Ethereum right now from a price perspective, but people are sticking to it, and I think you'll be rewarded. And I'm stoked that you joined Rise. We are really big fans of Sam, Sasha, and the team. Also just been supporting for a long time. So thank you for coming out, man, and keep shipping, man.
Yeah, thanks a lot for having me. Yeah, that's why I like to talk about the narrative and the vision of Ethereum, to remind people why we're here and why
That's
Ethereum
right.
is still good. But yeah, thanks a lot.
Thanks, Rip.
Important. Thank you, Rip.
See you soon, man. Yeah, man. That was the last one.
Yeah, that was great. Man, what an episode.
What a stream is right. That was a marathon one.
Yeah, it was.
Tons of really interesting commentary, good guests, fun time. Let's see what the BTC price did. I said I was bullish, right?
I think you've been higher every time.
Oh my God, we're definitely lower. We're at 105.7. Boy.
Yikes.
Done. I got that one wrong. It looks like you're 2-0 the last two calls because of
I'm the house. I just play whatever against the traders here.
Apparently. Man.
So. I think despite the price action here, this stream has given a reinvigorated sense of, bullishness on the industry. After hearing from Rip on ETH, after hearing from Flood on Hype, it's incredible to see both of the ends of this industry pushing from the app perspective and the protocol perspective.
Yeah, exactly. Just completely different lens and thoughts and focus points. But, there's just a lot of people that are committed and want to build. And I mean, we're here to support. We're going to scale the TV. We're going to keep growing. And the market's one thing, but, you know, we're here to stay. I just saw a tweet that Pakistan is going to create a Bitcoin sovereign wealth fund reserve. And I mean, it's all happening. So thanks, guys, for watching. Rob, thanks for being on. And
Bull or bear, we'll be here. We're not going anywhere.
Catch you
24/7
next time.
Cheers.
Cheers, brother. Peace. Speak to you soon. See you guys next week. Got a couple
Permissionless
episodes
coming up.
and permissionless coming up.
There it is.